Hello, hello, hello.
Good evening all.
Good evening, everybody. Hope everybody's well. Here we are again, one more time. Another week has passed. So, how's everybody today?
Good.
Only Denise is good. Okay, Denise, that's fantastic. What do you think is wrong with your colleagues?
I think they're still trying to connect and,
Oh, settle in.
get it, yeah,
Okay.
settle in, get it
Right.
together. So give them, they soon get it together though.
Yeah, let's give them a few more moments. Veronique is trying to log in finally. She's been gone for a while. And yeah, let's give the others a few moments.
But I would say that I'm most certainly well.
Excellent, Mario. Now, that is a word of encouragement for all the others who might be thinking, so what's so great about the day? All right, good stuff. Good stuff. Okay, Veronique, are you in? Okay, it's still trying. She's there.
Yeah, in the chat.
Issues, yeah, with a mic. All right, we'll start in a few moments. Okay, I'll just do my initial register. We'll see what we have. Vanessa, are you on board? Not yet. I see her. Veronique is there. Okay. Sorry, Hadith. Not Veronique, Hadith.
Yes.
Clinton. No Clinton yet. Mario is here, yes.
Present.
Okay. Daniel.
Oh, you heard me right?
I did, definitely.
Okay.
Daniel. Coming. Okay, Crystal.
I'm here. Good evening.
Okay, good evening, Crystal. Good stuff. Blaine.
Good night.
Night, Blaine. Welcome aboard. Denise. Yeah, Denise is here. First one to say she was okay. Veronique is here, yes. And then Chanel? No Chanel yet. Okay, a couple of housekeeping matters before we begin.
Vanessa's here. Good evening.
There you are, Vanessa. Excellent. Good evening. I was wondering if I had to send out an APB for you.
No, I'm here.
Here, yes. A couple of housekeeping matters before we begin. After class tonight, I will be sending out the final set of assignments for you to do for your practice sessions. Like before, I would like for you to go through the assignments. The first ones were fine. I didn't get bothered because I didn't see what the real problems were until the examinations. Most people did well in the homework pieces, but some people got stuck on some of the examination problems in certain areas. They were mixing up balance sheet items with income statement items and crossing things over a little bit. Just not unusual for first timers. Okay, you're not unique in that department. That is very common for persons doing an accounting exam for the first time. Period. Okay, so not to worry. So I'll be sending out those assignments right after class for you to prepare. They will not be due until next week, Monday. So you have the whole week and the weekend. Speed is not the objective here. The objective is actually going back to the text and getting some practice. That's the objective. So that when your final exam rolls around, you will not have as much trouble as you would have if you don't practice. Okay? Of course, as usual, I always encourage you to do a little extra on your own outside of what I assign. All right? Because there's no substitute for actually doing it over and over. The other thing is, I have your grades already. The reason why I haven't sent them in is because some of the final grades left me a little concerned for a couple of students going into the final. So what I like to do in situations like this is to assign a makeup exam so that those students who may need the assistance of some additional credit can get it before final examination. And those who have done well or reasonably well, they can get additional credit if they wish. I always encourage everybody to do the makeup exam. And so, does everybody in the class have a copy of the midterm examination?
No, sir.
No, sir.
No, they didn't allow us to take it.
No, sir.
Okay. The interesting thing about my examinations is I do not use previous examinations. Most of my examinations are custom, meaning that they change each semester. So previous examinations may not necessarily be very helpful to students coming in. So what I'm going to do then is, along with the homework assignments after class, I will send each of you a copy of the midterm examination. And I would like for you to do it completely in your best handwriting or typing. And I would like to get them all back by Thursday of this week, no later. If you send it after Thursday, you won't get credit. Okay,
That's for everyone?
everyone. If you don't feel you need to do it, you don't have to.
You're gonna send the grades too as well, like what we got on the exam?
I will send the grades after, after I've issued the midterm examinations, okay? The only reason why I've withheld them because I wanted to have this housekeeping discussion and then everybody, even those who may thought they might have done well, there are a couple of persons who did quite well and there are others who need help in certain areas, and I'm hoping that you'd be able to give yourself that help by doing the makeup examination, okay? I encourage you all to do it for the extra credit.
So we'll know tonight what we got on our midterm exam, just to be clear.
Yes, you will.
Okay,
Okay, so the makeup is due on Thursday and the homework is due on Monday.
Yes.
Okay,
okay.
The makeup is due on Thursday. The homework is due on Monday. All right. Please, I know some students, because of work and other commitments, they don't get around to starting homework sometimes until the day before. I encourage you not to do that. Also, I encourage you to In addition to the homework, please go ahead. I already told you what the format is going to be for the final. It's not going to change too much. So you pretty much know how you need to focus, I hope, by now. Go ahead and read and practice and learn and practice whatever you need to do. The more you do it, the more comfortable you will be come examination. Okay. Remember, your final exam is not a cumulative exam, so you will only be tested on the chapters after the midterm to the end of the semester.
Okay.
Absolutely. All right. Some persons actually left out entire questions for some reason. Maybe they were not comfortable with the answer, didn't remember or whatever. So I encourage you, when you do your final, even if you feel you don't know a particular answer, make up something. You might get lucky. Some persons, where questions had two parts, they answered one part of the question, but not the other part for some reason. And I think that may just be that there was an oversight, the excitement of the exam, whatever it is. Some of the questions had 2 and 3 parts. Some persons answered 2 and not the third. Some persons answered 1 and not the second and third. All kinds of little things that happen in examinations. You're not unique, okay? Especially first-time examination, for sure. Okay, so not to worry, not to sweat it. Go ahead and just do the makeup, do the homework, do your own extra thing. And if you do all of that, then you should be fine. Okay, there's absolutely no magic to all this stuff, especially when you're the new kid on the block. So you just kind of go through all the blah, 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 and give it your best shot. Okay. All right. Any other questions before we kick in? All right. If you think of anything, please feel free to raise it anytime during the class or anytime after the class. Okay, for sure. Anybody have anything pressing from the first part of the semester, like something is still not clear to me in my mind? Anything like that? No? Okay. All right. What about the worksheet? Anybody had any questions on the worksheet? No?
No.
Okay.
All of my questions are about this, like the inventory accounting aspect. That's where most of my questions lie, but that's not from the previous half. That's from the second half.
Yeah, I got a lot of questions from the second half.
That's where the questions lie.
You mean chapters that we've done already or chapters we're going to be doing?
Like everything from I don't
Yeah.
I think it's
Chapter
I don't know if
6.
it's your chapter 8, but it's our chapter 7, but like everything.
From
Like-
from this new half, I agree with you, Mario.
Yeah, that's where the questions lie.
This new semester, this new half is
Like what, for example, did you guys write anything down?
I was going to, but I didn't because I know he's like read stuff word for word in the class. But like
Yeah.
recording stuff, classifying stuff, analyzing what stuff to classify regarding inventory, FIFO, LIFO, what else is there? Standardized,
yeah.
somethings, things like that. Like it's not weird, but it's definitely
It's a lot.
it's definite. I'm sure it's simple, but it's not simple to me yet. So
Yeah.
I'd like for you to help us get there because it's not as simple as, of course, it may be as simple as a debit and credit to you, but for us, the new kids on the block, as you said, it ain't clicking yet.
No, I ain't on the block yet. I haven't even a kid yet.
Right.
I'm not even on the block yet. Okay.
Yeah, I
So-
agree.
So Mario and Hadith, you're backing things up. The inventory chapter for you is what chapter?
It's
I
just
think
examining.
it's 6 and 7 actually. Because I'm looking at
Yeah.
6 now, and 6 says 6 is mostly merchandising operations, and then I think chapter 7 is inventory operations or something along those lines.
Yeah. He went through chapter 7, Mario. I don't recall, or our chapter 7 is probably his chapter 8.
That's what I think. Is like last class he was doing our chapter 8, which was like
probably-
internal control and stuff like that, which was
Yeah,
good.
we were doing internal controls last.
Right. That's our chapter 8.
Boy, these this
I'm just trying to
inventory
figure out, there's a lot to remember in terms of,
Oh yeah, no doubt about it. That's always the challenge.
I think it's a lot more theory to comprehend too. Like it's
Yeah, I know.
more complex.
I know, and imagine that's a fundamental accounting 1. Imagine fundamental accounting 2 that you have to do.
Who?
see, I feel like if we get this down, like if we lock this down, accounting
No,
2 should
one
be
thing,
done.
no,
Who gotta do that? Who have to do according to?
everybody should do accounting 2.
I think it only makes sense.
Everybody should do at least accounting 1 and 2, fundamentals. Accounting has much more. It has intermediate 1 and 2. It has advanced 1 and 2 and more.
What?
But that's for the
Why?
crazy people who-
Wow, wow.
you guys think you have problems. This is a joke.
What?
No, man, I thought you just do accounting 1 and 2 and go on to the
No,
top.
this is beginning accounting.
What you need to be an accountant? Sure, please.
Boy, well, let's get the show on the road.
I thought you just need accountant 1 to be an accountant.
Well, no, accounting 1, you can't even be a decent bookkeeper with that.
Oh, wow.
Sorry. Okay, that's why they get the big bucks as well.
Yeah, I know if they get
There's
enough.
a lot of blood, sweat, and tears getting the qualification. Trust me on that. It's
Yeah,
like getting a
man.
medical or legal degree, same thing.
Yeah, this voice.
Yeah.
Yeah,
And
that's
I-
very encouraging.
Now, who said that's very encouraging?
Denise.
Denise.
Yes, sir.
Okay, I know what you mean. I know. I've been there, done that. It stinks. I agree. All right. But then no pain,
No gain.
no. And I like to use an example of a mom who's expecting her baby. Everybody's telling her the delivery is going to be so painful, and she's like, "Oh my God, I shouldn't have gotten pregnant." And it is painful. However, it's painful, but what comes behind the pain?
Pain.
No.
18 years of blood, sweat, and tears.
And pain. He missed the whole point.
You guys are just going right over the whole point. I get your point there as
We
well.
get your point.
I hope so. Okay, behind all that pain comes a bundle of joy. Now, let me just say a little secret, an accounting secret. The reason why most children appear to be blood, sweat, and tears because sometimes we don't egg them when we need to egg them. That's why.
Some of them you could egg on hot dog them and you know.
Yeah.
In my egg.
Egg them?
Yeah, yeah, I just
Well,
want.
you egg them by dealing with them very early in their lives and giving them the straight and narrow early. That's how
Oh,
you egg them. But you can't
So you don't-
expect to, like, just let them grow up and anything goes and then think that they're supposed to grow into some nice, sweet people. Doesn't work that way.
what you're saying is don't sell them dreams at all.
No, you tell them discipline, love, cut it, more discipline, more love, more cut it. Until they get it. Then it works if you do it. Like accounting, the more you practice it, the better you get. If you don't practice enough, then you're gonna get egged. It's like that. How about that?
You're trying to set
All
us
right.
up.
Mhm.
I know, encouragement. So when we're done with this chapter 7, my chapter 8 is inventory. That's going to be our next chapter. So whoever has issues with inventory, hopefully I can answer those questions for you. Okay?
All right, that's our chapter 7.
Yeah. And again, inventory is one of those chapters that create nightmares for first timers.
Mhm.
For what? No pain, no gain. All right, so let's finish chapter 7 first in my book, internal controls, whatever that is in your text. Okay. I think we were all the way down to the petty cash fund. Internal controls chapter is an easy chapter. It's just reading and remembering the key points about how to instill internal controls in the system. Things like making sure that duties are segregated, making sure that persons, two people are doing the same kind of work, making sure, what else do we do in internal controls? Anybody? What else do we do?
A lot of cash control methods.
Yeah, a lot of cash control methods, a lot of documentations from requisitions to purchase orders to invoices, checks, to authorizations, to receiving reports. All those things are implemented just to make sure that people don't run off with the company's assets.
Yeah.
So, people being who they are, if you don't have controls in place, they will, you have an expression in the Bahamas, they will rob you
Yeah.
blind.
You sure will.
Yeah, unfortunately. Okay, and again, there's some of the people who I was talking about that if we don't teach them early in life, they're gonna egg later. That's them. So, that's what it's all about. So internal control, internal controls then. I'll tell you a little secret. I wonder if Clinton has gotten in the room. Clinton, are you in the room yet? No.
I think he may be like on the other link because like they sent out an email today, but it didn't seem as though it was the right link.
I
Great.
think the two of those were the same links because I got on the one that they sent today. But the two of them have the same meeting number and meeting ID.
I think Clinton is trying to escape that inventory chapter, which is not a good idea. That's not the chapter you want to escape. The chapter
Oh, I
you want
know, because that one I want to skip that one. I tired, but I couldn't.
no, drink some coffee or whatever. That's not the one you want to escape. That one you want to be present for whatever it's worth.
Yeah.
Internal controls you can escape because you can always go back and read it up.
Yeah.
That inventory thing, there's some little things in there. Yeah, you want to get sorted out. All right, so the final part of the internal control discussion has to do with the setting up of the petty cash. And whenever we set up the petty cash, we say it's an impress system. And what is an impress system? Those of you who have read it already, you'll see it's just transferring money from the bank account to the petty cash fund account. And every time it gets low, we replenish it. That's all we're doing.
Mm-hmm.
Okay, anybody in this room ever handle petty cash?
Yeah, all of my districts, they would send in their reimbursement, the petty cash reimbursement form.
Correct.
Yeah, and so I would sign up on those and just come, they send it with all the invoices.
Supporting documents, yes.
Correct. And then I would, send it to the finance department to be replenished.
Absolutely. So if your petty cash is $500 a month and they spend $400, whatever receipts, etc., that they send to Hadith, they should add up to the $400 that was spent. Hadith will then send it to the accounts department, and the accounts department will do two things. One, they will write a check against the cash account for $400 to replenish the petty cash.
Mm-hmm.
And also, they will pass entries for the expense items that the money was used for during the period. Okay? Because whenever we use petty cash, we use the money to purchase little bits and pieces, and they're usually called expense items, whatever they might be.
Okay.
And basically, that's how the petty cash system works. Now, once we establish a petty cash for an amount, let's say $1,000, that balance in the petty cash fund never changes unless you change the amount of the petty cash. All we do each month is replenish it. So we have a petty cash of $1,000 and we use $750. The petty cash account in the general ledger will still have 1,000 in it. All we do is get the money that was spent, take it back to $1,000 in cash, and we keep doing that forever and ever until we actually decide to change the petty cash amount from 1,000 to 500 or 1,000 to something more. Yeah, that's pretty much how that works. So maybe I should, let me just bring up see if I can share my screen for those of you who want these a reference for a part until we get to that bloody inventory. I know people hate that chapter for some reason. Can you guys see my screen?
Yeah.
Okay, so the this first entry then is based on the narrative. See, we could have that conversation because you guys know the narrative now, don't you? Is now, don't you?
Yeah.
Yeah.
Can
Uh,
you, can you remind us of what it is?
Okay, somebody remind Mario, what is a narrative?
Alright.
That's the brief description, advising of the transaction.
Oh, like the
Absolutely.
note.
Like
Okay.
the narrative, yeah,
Absolutely. It's a brief description of the transaction. It's
yeah.
an audit trail. It's there in case somebody comes by
Okay,
1,000 years
right, right.
later and looks at it. They don't have to try and figure out what the heck happened.
Mhm,
You'll see right there that
Mhm.
this journal entry on October the 14th was to do what?
Debit the petty cash.
I mean, sorry, what is the note?
To
Establish
establish
a petty cash.
cash fund.
Probably the petty cash fund.
Now that's clear even to Rover. And that's why we put it there. We put it there each time. We put it there as simply as we can, so anybody could follow it. So this is for the establishment of the petty cash fund. Notice the journal entry is a very unique one. What do we debit?
Debit petty cash,
And what do we credit?
cash.
Why do we credit cash?
You're taking the cash out to increase the petty cash.
Yeah,
Mhm.
we're taking the cash out to create the petty cash.
Ah,
Itself will be in a little tin or vault or something under the control of a supervisor or some such person. Okay? And once we
So,
establish, sorry?
sorry, based on this diagram, petty cash is an asset.
Yes,
Okay.
Mhm.
absolutely. It's the same as cash. The only difference is the petty cash is in impressed form, meaning that that balance once established does not change, but it is still cash. Okay?
So
Absolutely.
is there normally like a limit, like you could have, I mean, for instance, like let's say I replenish whatever supplies out of my own pocket because I know, and I need to get my monies back. Let's say the stuff came up to, let's say, $700 would be,
Mhm.
is there a limit you would receive from petty cash after petty cash? Then you exceed the limit, you have to go debit cash, right? Is there a limit?
Well, that's a good point. You're looking at a situation where if the reimbursement to you is more than the petty cash fund,
Right.
yeah. If it's more than the petty cash fund, it will not come out of the petty cash fund.
Okay, so it'd have to be, okay,
So if your reimbursement is 750 and the petty cash fund total is 500, it'll not come. We wouldn't say give you 500 from the petty cash, replenish it, give you 200 from somewhere else, 250. What
okay,
we'll do is, since that's more than the fund itself in this example, what we'll do is just do a requisition and write a check for you.
okay,
Okay, that's how it works. Okay, good question, actually.
Mhm.
okay.
Good question.
All right, so we establish the petty cash fund, then we post it, correct?
Yes.
You guys should be master posted by now. Some people did some great posting, and others started off great, and then they went somewhere, and then they went great again. Like, which is understandable. Uh, Sometimes you're gonna go off course when you're doing things for the first time. Okay, so not to worry. It amazes me why students sometimes doing a first time course, sometimes they sound like they want to be perfect at it right away. And I'm thinking, okay, nothing wrong with that ambition, but doesn't always work that way for most students. Every now and then you run across someone who's like, "Mm." But the rest of us, we have to work our way to where we're going. Okay? All right, so how do we make disbursements from the petty cash fund? Well, for those of you who never knew, we drop a voucher. Do you see the voucher on my screen? Anybody sees my voucher?
Yeah, so
you do.
Okay. Anybody's ever seen a voucher before for petty cash?
Yes, sir.
you don't do vouchers.
Okay. What do you do? Just piece of paper somewhere.
Yeah, I haven't seen something like this before.
I know. So now you could go and do this and tell them, we need to upgrade our voucher documentation and to this. And then all of a sudden you'll be the hero or hated, one or the other, depends
So
on who
this
it is.
once, I'm just trying to understand, this petty cash voucher is, what is it exactly?
Okay, good question. Man, you guys asked some great questions, and that's really what it's all about. Can anybody say what this is exactly?
I think that's like a way to say that the petty cash would be decreased for this amount because the money is going to be spent on this thing.
I think it's some type of authorization.
Yeah, something along those lines.
Yeah, why would
It's a
you
way
say?
to balance it, I guess.
Okay, some interesting perspectives. Well, let's look at the description. This petty cash voucher is for what purpose?
Postage
Due.
expense.
And how much will the postage amount be?
$2.86.
Now, would we know about postage before or after?
After.
Typically after, but then it depends. Some people have some,
Depends. I was
have
about to
some,
say.
yeah, some people have some amounts before, so you
Mhm.
can, oftentimes you can know before as well. So what do you think this voucher does?
I guess it gives the approval or the authorization to pay $2.86 for the postage to the post office.
Or to the person who presents evidence that they paid to get it,
Right.
okay? Because notice, what is the topic of this petty cash voucher? Reimbursing the petty cash
Reimbursement.
fund,
Okay.
okay? So when we talk about reimbursing, what are we talking about?
Paying a
After,
person back.
yep.
Aha, this is interesting. We have a little note here that says, assume that after 2 weeks, the petty cash fund established earlier has a cash balance of 1427. And petty cash vouchers are as follows. And then they give us a list of expense items. And then we're asked the entry to replenish or replace the funds would be. Okay, that's fine. Is that transaction different from the petty cash voucher?
Hold on, let me see.
Or what exactly is the petty cash voucher? What is its purpose?
To make disbursements from the petty cash fund.
That's all.
Okay,
What is the question? Sorry.
what is the question, Mario?
Whomever
What is
receives
it?
the funds must sign
What
them.
is the purpose of the petty cash voucher?
And you said,
To make disbursements from the petty cash fund?
yeah, in order to make payments from the petty cash fund.
Ah, there we go.
Okay, so
Right.
every time we're paying money out of the petty cash fund, we prepare a voucher. The
Yeah.
voucher will replace the cash that went out.
Right. So it's a
Okay.
way of balancing, like I said.
Yes.
So
Okay,
you will have this along with an invoice.
or whatever documentation is necessary. Yes.
So you
This
would physically give this person $2.86, and you
Yes,
would replace this voucher with the $2.80. At the end of the day, when it comes to balance, it should balance back to whatever the petty cash figure is,
correct. There should be
along
a
with the
voucher.
vouchers.
Yeah, there should be a signed voucher and a neat supporting documents.
So
Okay,
this would also, these vouchers would also come in play when it's time to replenish the
of
petty
course,
cash.
definitely. As a matter of fact, they're the documents that will go to the accounting department to prove the expenses that were posted.
Okay.
Okay, notice the key thing about the voucher. First of all, it has a voucher number, so it has a number system, so nobody could egg like
Right.
invoices. Okay. Secondly, it has a date, so nobody could say it didn't happen on that date. Thirdly, it has a description for postage, so everybody knows exactly what it's for up front. Fourth, it has a charge to position, so that the accounting, you know exactly where in the general ledger it goes and so on. And then, equally as important, we have two people to sign: the person who's receiving the money and the person who's approving the giving of the money.
Mm-hmm.
So there's no horse dead and cow fat, the old people used to
Yeah.
say.
What about in smaller companies where Like for instance, my person's on the island. Let me give an illustration. You could tell me how to use this. Just help me out here. Let's say, for instance, they go into the boat to go pick up a package.
Right.
That is, they would use the petty cash, right?
You
So
mean they
let's
use
say
their own money?
they would use the petty cash money to purchase to pay the freight for stuff on the boat.
You mean the petty cash they already got from you?
Correct. So
And you
let's
would
say they have $500 petty cash, but they're using the petty cash to go to the boat to go drop a package to the airport to come on the flight.
Okay.
They
Um,
pay that out of their own pocket and
No,
then get
no,
reimbursed.
they don't pay out of their own pocket. It's
Okay.
$27.50 to send a package, an envelope on the plane.
Oh, so they know the price. Okay.
We know the price.
Okay.
So
They
they-
would send the $27.50 and have whomever, let's say, for instance, we don't have a courier. So let's say, for instance, we have the front office she's a supervisor.
Mhm.
Let's say an agent is dropping the package to the airport. We would give her the $27.50 and she would sign this petty cash voucher. So she would sign that she received $27.50 from the front office supervisor.
Right,
And she would bring the $27.50 receipt from Bahamas Air.
right.
Mhm.
Sounds good. That's
Okay.
exactly how it should work.
Right.
Absolutely. And that voucher is there so that nobody could say they didn't get the money.
Correct.
You know how we go. If you're dispersing money, make sure you don't get so busy talking that you forget to get their signature. They might keep you talking. So you
But
can
here
forget.
in Nassau, we don't use the voucher at all. I was
What
just
do you
trying to
use?
remember where I saw it. In Nassau, they don't use their petty cash like the island persons, because you know the island for courier services and all that, they use it like every day.
Right,
2-3 times a day. Even for water and stuff, they use it for a lot of different stuff on the islands. Now they
right.
don't replenish, they don't use their petty cash probably maybe once a quarter.
In the island.
No, here in Nassau.
So you don't use it too often here.
No, and they don't use the vouchers. What they normally do, if they take something out of the petty cash, they would just send an invoice for whatever they use it for. And then we replenish from there.
I see. So you take the invoice and give the cash.
An
Yeah.
expense
No, they have
statement.
they have the cash. They have the cash. Let's say I'll give you an illustration, like we bought some Independence Day teas, right? We bought that.
Mhm.
I told them to use the funds on the petty cash. The only thing that was presented to me was an invoice for the shirts, for the teas, not a petty cash, not something with my approval and all of that.
So, oh yeah, they don't. So you just took an invoice.
Just an invoice, and I would have been able to use that to send to accounts to replenish the petty cash.
But suppose the accounts say they have a problem. Suppose the accounts come back and say, who authorized this disbursement?
Right.
If they, I guess it's never happened, but I guess if they say that, then obviously all eyes will point on me.
Yeah.
Mhm.
So tomorrow you tell them you just finished doing it. Well, you don't tell them that. But tomorrow, and when I say tomorrow, and maybe not tomorrow, but symbolically tomorrow,
Mhm.
you should think about adopting a voucher system.
But we have it, like I say, in the islands, but I'm just curious to know why it isn't here in Nassau.
I know, and you should try and have it introduced in Nassau as long as you have to deal with it, just like
Yeah.
they did in the island. Because if they just give you an invoice, nobody's saying they received the cash, nobody's authorizing it. It just goes to account. One of these days, something is going to come up. Because what doesn't happen in a million years will happen in one split second.
Okay, thank
And
you.
then if they say, who authorized this? And then you say, me, they say, where? And you don't have a signature. Who received the money? Jenny received it. Jenny who? Jenny Simonet.
And it go,
Yeah, and they said, really? Where's the proof that she received it?
it's serious.
And you say,
Back
well,
and forth.
yeah, then you're gonna have a problem if somebody wants to mess with you.
Right. I never received that.
Of course. They may go to Jenny and say, Jenny, I will mess her these up or whoever it is. Just say you didn't receive it, because there's no proof where you signed for it.
Yeah.
And then they say, oh my God, so you in tears. Jenny, call Jenny. Jenny come in. Jenny, tell them you get the money. She said, I never got it.
Jenny will be home without a job.
Oh, no, Jenny's not gonna be home.
No, she could be
But-
home. You gotta worry about that.
The person who's in charge of
You know,
petty
too, you don't gotta worry about that. She'll be home quick.
They could even think y'all in cahoots. I
Oh,
don't
no, you
know.
don't gotta worry about that.
Well, all kind of things gonna go down. Cahoots, or Jenny and she's lying, or whoever's in charge of petty cash. Ultimately, it's gonna fall in the lap of whoever's in charge of petty cash.
Yeah,
Ultimately, all right. So I would say if they don't adopt something similar to what's in the island, if everybody will know why you want to come up with all this fancy stuff, you never did it in Providence. Tell them you try to dream about it, you couldn't sleep, and you decided that was the best thing for
Okay.
everybody, especially you.
okay, sounds
Got
good.
it.
Thank you.
Absolutely. I can assure you, you might get a little, but that's okay. Create, and if they don't want, and you can create your own vouchers, just go type it up and copy them, use the company copy and put them in your tin, right?
Yeah, but how does it work if they're gonna buy, okay, say for instance on the island, I don't even know if they use it for everything because, for instance, when the water guy comes to drop off the water, you know, who you paying them directly, or when they go to the store to go purchase something, you know, and it's only one of them. In most instances, it just it can't work for everything.
Yeah, see, first of all, nobody could get paid unless you open the petty cash tin, correct?
Mm-hmm.
Well, every time you open the tin, you write up a voucher.
And so you
That's
sign up
all.
on it, and you sign off on it yourself. 'Cause, you know, like I said,
You sign, and the person who received the money signs.
so you're gonna have to ask someone from another company, whoever you're doing business with, to sign that.
Whoever's receiving the
So if you're
money.
in the food store and you're paying, I'm just saying, because these things happen all the time. Where you're in the food store, you're probably purchasing something for the office. It happens.
No, that's different. See, if
Yeah,
you're in
that's
the
what I'm
food
saying.
store and you're purchasing something for the office with your money, right?
No, with the company's money.
How did they get it?
It's only one of them. How did they get it? They gotta go in the tin and get it. Someone have to approve it. I'm not, it's,
Now, here's what I'm saying. If they go in the store and buy something, they're using the money out of petty cash,
if they go in the store and buy something for the company, then yeah,
right?
they're using the
Okay.
petty cash funds.
How did they get it?
Well, there's only one of them, so they go in and they get it out.
They just go in and get it?
Well, if it's only one person, then yeah.
Well, I mean, who's in charge of petty cash?
Okay, there's a supervisor, just so you understand the dynamics of the office. In
Right.
some instances, it's just the supervisor themselves who's in charge of the office, everything in the office.
That's fine.
Right. And so if no one is there, no one could approve, no one is there to verify anything because it's only you. You get my point?
That's okay. If
Right.
if the supervisor is in charge of the office
Mhm.
and somebody needs money of the petty cash, the supervisor has to give it to them, correct?
Yes.
And so when the supervisor gives it to them, they should have them sign a voucher saying that they received the money.
Yeah, I understand.
Now, some organizations don't do that. They take a chance by not doing that. Because every time, if you have any system where you're issuing money without somebody signing to say that they received it, you're
Mhm.
setting yourself up eventually for something to go the other way.
I agree.
No question. And sometimes it takes a long time before it goes the other way because everything's quote unquote appears to be going well.
Yeah.
And then one day though,
Yeah. You're
yeah,
right.
yeah, the stinky day comes for sure. And then all hell breaks loose. Absolutely. So yeah, that I'm happy you raised it because for others who may be in charge of petty cash, who may eventually have charge of petty cash and all that, nothing wrong with taking on that responsibility. Now that you've done this class, you now know what you need to do. You need to have some kind of voucher available. So whoever's receiving the money, sign for it. I don't care what they tell you, but Tingham coming to sign. Tell them fine. When Tingham signs, then Tingham gets the money. Nobody gets money out of my petty cash. I don't care who we are. Whoever has responsibility, nobody should get cash out their petty cash without signing for receiving it. Period. Period. If the general manager comes to get money in petty cash, man, I'm the manager, I'm the GM around this fucking place. Tell him no problem, sir. But proper accounting practice requires you to
Absolutely.
sign saying that you received the money. That's all. And if he doesn't like it, too bad. Don't give it to him. Let him
That's it.
slap you down and take it. Then you call the police.
I know about that.
Well, you know what I mean. I'm just being dramatic about it, just to make a point. Because sometimes it happens, by the way. People get intimidated to do the wrong thing. Did you know that? A lot of people get intimidated by senior people to do the wrong thing. And they feel if they
Yeah.
don't do the senior people say they're going to lose their jobs. And some people have actually lost their jobs for not doing the wrong thing that senior people want them to do.
That's true.
Because generally, junior people and your peers don't ask you to do it unless it's collusion. Senior people always ask you to do crazy things that everybody knows is wrong. And then threaten you if you don't do it. So, excuse me, isn't that wrong? Isn't that against policy? Isn't that against generally accepted accounting principles? Isn't that immoral? Isn't that unethical? Isn't that even illegal? And they say, well, I'm the boss. Do it. I'll take responsibility for it. And then if that's the case, you can invite him to do it, him or herself. And let them know that you're going to lunch. So that you have no what? No part in it. Okay? But if you sign to take on petty cash and they don't want to sign, don't turn the money over no matter what they say. Because at the end of the day, if you do that and somebody denies receiving it, then they're going to say you are a TIFA, as we say in the Bahamas. Okay? And people will swear on a stack of Bibles when push comes to shove, in case you didn't know, especially when it comes to money. All right. So that's the power and importance of the voucher. Do not underestimate its importance.
Can I say something right there, please, Mr. Walker?
Definitely.
And I don't mean to go off course, but I just want to say this story right quick. That happened to me. I was in a situation like that when I first joined the bank over 15 years ago.
Right.
Been on the job maybe 2 months, 3 months,
Yeah.
fresh
Do
out
it.
of training,
Yes.
and the manager wanted me to debit her husband's account.
That's right.
She gave me this voucher, in-house voucher,
Yeah.
debit his account, credit her account. And when
Yeah.
I went to do the transaction, I realized, okay, this is a sole account, this is not a joint account.
That's
The
right.
manager's, she's not on it.
That's
So
right.
I brought it to my supervisor's attention, and she was like, oh yeah, that's her husband. I say, I know. I said, but this ain't no joint account.
Thank you.
But I
That's,
find that when people know that you knew, they try to take advantage of that
Whether
situation.
you
and
knew or
that's
not.
what I was thinking. Not until like
So,
I got
see,
pulled in the office. Like
I have people try me
shoot,
every day, Denise.
listen,
These agents, they so crafty. They come to you with
listen.
all kind of stories. And if you don't, because they
agents are flicking super agents. They listen. I've been hearing stories about agents from when I was a little boy when they used to come to your house to collect the policy and mark the book. Anybody remembers that?
Yes.
Yes. And oftentimes the money collected from marking the book oftentimes never really balanced.
Yeah.
Don't
And
do
a
that
lot of
because I have a
agents
history in
struggle to-
sales. I was a sales agent before, so
Yeah. So
but
yeah,
I was an ethical one.
yeah, of course, not everybody's dishonest, but you have a gang because they collect lots of money in any particular day or week. And if you're not checking and monitoring and all that kind of stuff, they will be running all kinds of programs, collecting money, not marking the book, mark the book when they get the money back, all kinds of crazy stuff they do, especially if you're not checking. Okay, for sure. All right. So yeah. So whatever came out of that case with the doggone debit.
That day, it ended up running on for about 3 weeks, but that particular day, I refused to do it because I sat down and I was about to do it, after feeling all the pressure. One of my co-workers on the teleline with me, she was like, oh, we do it all the time. So I was like, okay. So I was sitting down about to actually keep this transaction, and I went back to my supervisor. I said, but okay, fresh out of training, from what I understand, we ain't supposed to be doing this, blah, 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 blah. So she was like, well, yeah, we know, but that's the manager. And Talithia, no, oh, sorry, I ain't supposed to call her name. Well, so and so normally is do it. I say, is it okay that I give to her to do? Because I don't feel comfortable doing it. I mean, since she
Good.
always doing it,
Good.
you know? And she
Yeah.
was like, "Well, that's fine. You can give it to her." And I gave it to her and she did. I didn't do it. But it, like I said, it run on for a couple of weeks because I got pulled in the office. I was
Wow.
like, just targeted, whatever, whatever. But I
Yeah,
was like,
definitely.
okay.
But kudos to you for holding yourself together in a situation like that. Many people would fall apart and go ahead and do it. That
Belly break
managing.
down.
Sorry?
plenty, plenty people let belly would break down.
Of course, among other things. And that manager knew better. Why didn't he or she do it? Why wouldn't they just process and put their signature on and put it through? Why give it to a newbie?
Yes.
Okay.
Oh,
And
it's really tough because I overheard a situation about some years ago where, like, I think this when VPL was BC and they had some sort of like scandal or like
All the time.
some senior people was
All the
telling
time.
some intermediate people to do some
All the
things,
time.
and
Yes.
then boy, that's tough. That's really tough.
A lot of people are not aware of the, like Rodney Monka would put it, the amount of gangsterism that goes on within organizations. Okay? Serious theft and fraud and embezzlement and all kinds of crazy stuff used to go on and continues to go on. We just don't know anything about it until something hits the fan. Okay?
So is
And
anybody clean? Is anybody clean? Is
oh,
anybody?
definitely. No, the average person is clean. You just have a whole gang out there somewhere who are not. That's the problem. The average person, we do normally what is required for the most part. But then that other percent, whatever that percent is, they wreak havoc on systems all over the world.
but
So
y'all notice is always the people that wreaking havoc that don't need these monies. Like it's be
well,
people who's be taking advantage of the system or people who well off taking advantage of the system.
yeah,
And us
because
or people who can't make it so innocent paying these bills and thing on that.
yeah, very much so.
If
That's a strange irony. The
I
ego.
thought about it, and I like I say, just born right, but
You better
I
believe it
think
is on.
I think that the more zeros or the more significant figures that appear on their account, like the less I don't know if excessive wealth is like a psychological tainting source, but I noticed like you said, like the people up there, they don't like to use their own money. Like they just like to look and let it sit there and use other people's money to do whatever they have to do, whether that's to survive. And the way they use other people's money, like we just discussed, is not the most ethical way, but they could have hundreds of thousands and use their company's money because of their position. I don't know, it's weird. I was just having a discussion with someone who is not a small fish in the bank, and she was like, she gives out loans of like six figures just for people to, like to play around with. And of course, I guess on paper that's a legitimate way because it's a loan and they're going to pay it back, so on and so forth. But when you look at people in higher positions in other aspects of the economy, I'm pretty sure they're not so much legitimate. Those transactions aren't as legitimate as the one in the bank, but it's like when they get the funds or when they get, like I said, like when they get like the tens of thousands or hundreds of thousands, for some reason they don't want to use their own funds, but use other people's money. And then I remember having some conversations with these people, and like they tie them, they like justify their financial behavior with the theories they internalize from like America. One of those series are the things spoken from a guy who proclaims something, which is rich dad, poor dad. I don't know, it's weird, but boy, I think there's some sort of like psychological thing that people slowly or subtly develop when they start getting into those big bucks, if they aren't really assured. Because speaking to some of them or knowing people who know them personally, it's almost like they somewhat do that to like not justify themselves, but make themselves feel more secure in some way, shape, or form. But I don't know. But what you said, just I don't know if it's Denise who said it. I don't know. But what you said about like the big dogs doing fool and like the small people being humble, that's a serious thing.
Well, the truth of the matter is, it has always been that way. The majority and the mega corruption issues are always at the top. Very, very little corruption in terms of huge sums of monies and resources occur in the middle and at the bottom. Usually it's at the top. The other problem at the top is even when people have gazillions of dollars, the Bible talks about something that we call greed. And we keep trying to underestimate the power of greed. See?
Yeah.
It's like the power of greed is like the power of sexual attraction. It is so strong sometimes that we know we shouldn't do it. See, we know, even as we seek to engage, whether sexually or in greedy behavior, we get this feeling in our stomach, we know, don't flick and do it. But yet, it is so strong, the desire to be greedy, to get more and more. It's never enough. It's never, no matter how much we have, it's never enough. And of course, when we fall into that, any of those kinds of categories, then we have disaster. And all too often, those mega issues do not occur in the middle. They do not occur at the bottom. They occur at the top of the pile in every type and sort of organization and country. Okay? They have a guy in New Guinea right now. Nobody's talking about him. The king of flicking New Guinea. New Guinea, if you look at the country, is one of the poorest looking countries. Looks like a poor part of Haiti. Yet they discovered oil in New Guinea not too long ago, and the king and his family are living like gazillionaires, stealing billions of dollars and hiding it away, and keeping the resources away from the people. They live in squalor, hungry,
Wow.
suffering shacks. See my point?
Yeah.
That's just a sheer desire for greed and power, and desire to have people sniveling at our feet by keeping them poor and wanting. This doggone enchanted. Why does
Sad.
that happen? It has always been happening from the beginning of time to this very minute, and it will never stop until Christ himself comes. Guaranteed.
Suffer.
Okay? Never. Because we do not have the ability to overcome that stupid drive for power and greed and doggone selfishness and putting our feet on people's neck and treating them like dirt. Like we don't seem to get it. In fact, we seem to get this thing from it that drives us even more into it. And you think after all these centuries, Christ came and died on the cross, went back to heaven. We saw all that. We still don't change it. We're still like that. And like my grandma say, worse than before. How's that? Okay. So yeah, that's the reason. Sorry. It stinks. Okay. You just have to decide which category you want to be in. See? Yes, question.
Which category does accounting fall in? Where they fall? Let me see what I
Accounting?
would do. Yeah, where they fall in that category. They making money?
Accountants? You mean accountants
Yes, accountants.
in terms of greed and theft and all this crazy
No,
stuff?
making money, like making money. It's like
Well,
You wanna know what the salary range is?
yeah,
so I could get up there and make some money with them.
you mean legitimate money?
Yeah,
Oh, okay.
legitimate money.
Yeah, legitimate. There are two types of money you can make.
No, legitimate money. Yeah, I
Legitimate
can't
money
work, but
and
no,
crooked money.
no,
You're talking about legitimate money.
legitimate money. That's all I
Okay.
into.
So starting salaries for accountants are around 30 to 35,000, depending on where you go to work if you're a trainee new. Then after,
That's a weekend. How much?
35,000
What?
a year. Well, you just come out of
That's
school.
plenty money?
Of course, it's plenty money for somebody who's just getting. How
See
the
the
hell
point.
they gonna pay
Boy,
you?
y'all sound greedy already.
Hold
No,
on.
but see, y'all gotta understand, I spent most of my adult years in sales. And so $30,000 is, I can make that in
No
less than
money?
half a year.
Well,
Listen, that
So my
30
old
grand,
mindset, this is a
that
new for me. I
30,
spent, my old mindset is, I thought he's talking about
I thought he
120,
gone as well, like,
150,000.
folks,
and
don't,
I was
don't,
thinking like 70,000 something.
no,
like,
don't get
that's
me
the
wrong.
minimum.
No, don't get me
That's like when you
wrong.
reach partnership.
Listen, don't mix it up.
no, them partners is be kicking 6 figures easy.
Partners be kicking the money, bro.
It's be
Yeah,
kicking. Oh, I just talked to one
partner.
of them a couple of days ago. They say, boy, they say the buying of your partners like
Accounting
millions.
starting rate is only 35,000.
That's like first year associates. That's a lot. That's like 20-year-olds fresh out of college.
Like only an associate's degree.
That's like
No,
no, you gotta
that's
have a
like
bachelor's.
yeah, it's like you.
No,
listen,
bachelor's.
folks, listen. We are talking about accountants who have passed the CPA exams, but they're just starting in the real world. See,
Right, okay.
the academic world is not the same as the real world.
And
When you
so,
get your CPA, that only means that you've acquired the information to get started. That doesn't mean you know a damn thing about a damn thing. See my
So
point?
when the money, when they make the money? When
Later, no, later when you get experience and mature in what you do.
and then how much, when you say money, how much you talking?
And well, I mean, the average accountant can make anywhere from $80,000 to $600,000 a year, depending
Oh,
on
yeah.
where they work.
Well, now you're
Okay.
talking money.
I know, but it doesn't happen overnight.
In the Bahamas?
Of
You
course,
know,
in the Bahamas.
Mr. Wilkinson, you know what you're saying to me. You saying to me.
tell him what you saying, man. Tell him what he's saying.
Because I
Yes,
am
they're not Mario.
okay. I thinking that, when you get the CPA, you starting off like about 50,000 entry
No.
level.
No, in the United States, you
So
start
that's
off.
just like any other
Listen,
degree.
No. In the United States, you just come out of college with a CPA, you start off with 40, 50,000, 60,000, depending on the firm. Some pay you even more, 70,000. Depends on where
I
you
say in
start.
the Bahamas. Huh?
But
Okay,
remember
so
now,
okay.
when you start at 60,000 in the US, the UK, or Canada, you're talking 30, 40% tax on your income.
Yeah,
That's
so
still, no, but that's still more than 30,000.
no,
but
it is
see,
check it down to
be
30,000.
careful. See, watch this. If you get paid 60,000, let's say you come out of college, get 60,000 in the US, right?
Mhm.
That is 5,000 a month, right?
Yes.
What is 35% of 5,000?
Let's see, calculator.
All I know is too much money.
Well, this is accounting. You should have calculated.
They can't get a 21,000.
We just finished studying this in chapter 7.
Can't get my money.
What is 35% of $5,000?
$21,000.
No.
That's
I said
1,750.
Yeah, 1,750.
Oh, you're talking about off the 5,000. Sorry.
Yeah,
That's
subtract
21,000 a year. Mhm.
subtract 1,750 from 5,000.
That's 3,250. That's like the starting rate of a first year associate.
Listen, that's equivalent to $36,000 in the Bahamas a year.
Wow.
Because, because we don't have tax.
Yeah, we don't have income tax.
No.
If I
So-
just do a business administrator degree one time and just call it that, if that's
no,
it,
no.
it could be equal to the same
No.
thing.
See, now let me just tell you something. In the old days, there was an expression that ignorance is a serious thing. Remember, ignorance does not mean that anybody is stupid.
Mm-hmm.
Ignorance just means you don't know what's going on.
Lacking knowledge.
Yeah. Okay. Look, see, let me tell you another secret, folks. When you want to become a doctor, first of all, you have to do pre-med, right?
Mm-hmm.
5 years. You haven't earned anything. All you did was spend money. True or false?
Yeah.
True.
Then after pre-med, you have to do your residency. Sorry, then you have to do post-med, which is another 2 to 3 years. That's 8 years. You make any money yet?
No,
No.
no,
No, then
It's
after
fair.
you've done 8 years, you have to do 2 years of residency. 10 flicking years.
10.
And
Uh-huh.
while you're doing your residency, you are
Mhm.
doing it under the direct supervision of senior medical practitioners. Because they're not
Right.
going to let you do a damn thing until they are satisfied that you are ready and
Right.
competent. And you've already spent 10 years in school,
Right.
but you spend 10 years just learning what you're supposed to do. Then you haven't earned anything yet.
Mhm.
Then you get into a medical hospital and they tell you your salary, depending on where you are in the world, could be anywhere from $25,000 a year to $40,000 a year starting salary. After
Wow.
all that,
Foolishness.
No,
well,
man,
no,
that's
it's not foolishness. Listen carefully.
Wow.
Remember that word ignorance? It's not. Watch this now.
What?
Once they finish their residency and they become competent in what they're doing, then when you walk in, they can knock you on your knee, open your eye, and charge you $300 for 5 minutes. How about that?
I know you all
So
guys work in the bank. The bank has a salary in the bank.
It's good.
Who did I
Depends
say?
on what.
That was
No,
quick.
no, depends on what bank.
It depends on what bank you do
Depends
now.
on what
If you go on,
position
if
you
you go into
hold.
them,
Okay.
you
If
go
you go to
to
them, what? Clinton has arrived.
Listen, they making money.
you go to
They
certain
making
banks.
money.
You can make money
What kind of
regardless.
money, yo? What you all making money?
You let me. You get.
you could range from between 30 to 80K.
Okay.
Starting, yeah.
Management level could go up to say from 80K to at least 250K.
And that's a typical
That's good
manager.
money.
You,
I
yeah,
mean,
that's a typical.
presidents
No,
for
it's not
a
typical.
No, what I'm saying, okay, so like let's say like a unit manager can take home like about 2,700 every 2 weeks.
Sure.
27. I know. Okay.
Mhm.
Every 2 weeks.
Mhm.
Yeah, that's 70,000, 80,000 a year.
That's a
A lot of payments
regular
are making
unit.
that.
That's a
Yeah,
regular
a lot of
unit
payments ain't
manager.
making that. A lot of payments.
Pardon?
No, I say it's right. A lot of payments ain't never make that. They're
That's what
like,
I'm saying. Every 2 weeks,
Most
you
payments
take
don't
home
make
like
that.
about 27, that roughly. Now that's typical unit managers. Then you have other managers that are in charge of certain, like you have managers that are in charge of retail banking. Then you have managers that are in charge of commercial, different things.
mhm.
They can take at the end of the year, some of their bonuses be 100 and something thousand. That's the
Wow.
bonus. One-time payment, 100 and something thousand. I've seen this because I've done this myself.
And dying
And
shares yet.
every year at a certain time, I
Dying
think
share profit share yet.
it becomes depressing because you look at this, you see what's going on first, and nobody asking you nothing. You seeing this firsthand. One-time bonus payment of like 100 and something thousand.
Yeah, that's
Yeah.
good. No, but I know about that because I've been in sales and like I'm in sales, in the insurance industry, and those financial services agents, man, listen, one check you print could be up to 20, 30,000. Yeah, they could make, and that's not in their salary. They get that
So
every month.
they making money.
Yeah.
But
Lot
you
of
just
money.
Everything is relative.
Yeah.
And whatever we are doing, we have to consider the relativity of it. Okay?
No,
Something-
hold on. Sorry, that's you gotta make sure you have the skill set in your papers now. Yes, you can get that.
they need the experience.
You need
And
to
the experience too.
okay.
And the experience
Oh,
too.
Let me tell you something. There are some people with no papers who
I
are
just was
making
gonna
3
say
times.
that because now the bank is leaning towards papers now in the last couple years, maybe like 2000s and so. But I have worked under managers after managers after managers that has taken home
Mhm.
incentive pay of millions of dollars. I'm talking about managers who's been in the bank for like 40 something
Yeah.
years,
That's quite
and
possible.
they don't have no papers.
Mhm.
None.
but they have
Ah.
experience, because like I said, they was there from their first job, so.
That's why they just hold on to
Ah.
them positions for their dear life. Because if
Listen,
somebody younger come up,
Well, I mean,
that's a
if it's
problem.
not, if it's not broken, why do you fix it?
Exactly.
And
I
let us not forget, there's a different salary range for black managers versus white managers. There's a different salary range for Bahamian managers and
Versus,
executives
yes,
versus
very much
foreign
so.
managers and executives. So
Yep.
this thing has a whole lot of issues attached to it. There are a lot of
Yep.
debits and credits attached to this crazy thing. Okay? All right. So yeah. All of
Any
that,
money in the
all
bank.
that serious conversation came out of petty cash. How ironic is that? Amazing what petty cash
Ain't
was
talking
for,
about no
right?
petty cash.
Yes. All right.
Yes.
So if you don't have a voucher in place, put one in place, or else sooner or later something is going to go wrong, and then you're going to say, "I should have listened to my professor and put that voucher in place. Now I have to explain my integrity after 20 years of doing the same thing." See my point?
Huh.
Because remember how people go. You only need to make one mistake, right?
Mhm.
And they don't want to hear. They don't want to hear that you did it right. 17,336,000. They don't care. All they want
Right.
to know about is that one time. And dog eat your lunch. All right. So now, how do we replenish petty cash? Well, if you look on the screen, all the expenses, what the money was spent on, the accounting department will prepare this journal entry, and whatever they total, we credit cash for that amount. Simple. There's no magic about it at all. Very straightforward. And then post. All the expense items go to the expense accounts, each one of them individually, and then the credit to cash goes to the cash account. Simple as that. But that's how it is once you figure out the basic stuff. Okay. And that's it for petty cash. No big deal. Okay. All right. So now we move down to this topic that Mario and others say they don't like. Inventory. So let's see what the big problem is in inventory.
Yeah, so much a problem, you know, just wasn't smooth.
There's a problem. There's a problem.
Can I tell you a secret, Mario? You still single, right?
Ah,
Gotta be singing in this accounts class. You can't keep no woman with this class late like that.
see, that's why I thinking before I go make this decision this weekend. Because I
That's
just
as bad as Mr. Wilkinson. Stop
I
it.
just learned you have accounting 1, 2, intermediate 1, intermediate 2. I wasn't thinking about all that, but I
You better
did, but I
keep
did.
that 50,000 is more than enough, Mario. No food.
Well, yeah,
plus some other
technically I'm
benefits.
still single, yes.
Good. Then in that case, then you can tell her, don't bother you until the semester is over without having to worry about it.
Yeah, I think I'll be making that statement.
Do it gently. You know, when you say don't bother you, doesn't mean she can't call you and say, "Hi Mario, how are you?" And say, "Right, they're busy as a bee." Or doesn't mean she can't like come and read something while you study and do your homework, as long as she doesn't distract you.
Hmm.
Mario,
I listen to you, I listen to you.
okay, because young men are easily distracted.
This is very true.
Even
This is
older
true.
men, they tell me are easily distracted. You should know better.
Don't get distracted, Mario.
Listen, after that conversation we just had about the petty cash, I focused on the narrow.
Okay. So that was
I have
an
a question.
yes, question.
For both Mr. Wilkinson and Flint, two men whom appear to be sensible, right? So what if you come across a partner who seems to be like a seed and soil for both your future endeavors as well as hers? Say, for instance, I am deciding to pursue this finance sector and she's deciding to pursue the health sector.
Okay, a power couple.
Yeah.
What you want, just be ready for when you're studying and get in a call and be like, buddy, I'm here to study.
Yeah, that's what I think about now. Right.
So your question is, Mario?
The question is it worth trying if it looked like the two, your future goals align, and like the two, you value academics. So I'm like, on the
Wait till you
same
finish your academics first.
level.
That sounds like Clinton.
Yeah, when I was in college, I didn't have girlfriend. I was a Division One athlete plus trying to do classes at the same time.
Yeah, boy, yeah.
Yeah,
You
having a girlfriend, or in some cases a boyfriend. And I say in some cases because girls are not as easily distracted. Sometimes they are, but they are less distracted generally than guys. And so I encourage any guy who wants to get anything constructive done, having a regular girlfriend, like you in college and all that, unless you have your act together, you're a genius, you're not able to do your time and plan your whole program. It's a major distraction that could derail you in one form or another sometimes. Okay? Does that mean you cannot have a girl in university? No, it doesn't mean that. If you can maintain a relationship and get your studies done, then fine. But if it starts to make your studies and your grades suffer, you have to make a choice. And at university level, the choice must be that she leaves and you study. I don't care what she looks like, Mario. I don't care what.
Listen, I only laugh.
Never
I only
mind.
laugh. I only
I,
laugh.
I don't care how many guys you think are gonna run off with her. If you give your studies priority over her, I don't care if you think she's the last sexiest, most beautiful woman ever to remain on the planet, whatever it is, you have to put your studies first.
This is very
Okay?
true.
And then I guarantee you another hadith will be out there waiting, or whoever, when you are done. Okay?
That's it.
Fair
then.
enough.
Because if
All
you
you have to do
do-
is start making
don't
money.
do
Then you
that,
can.
and you get derailed, then she's going to be the first one to say, I didn't tell you to get derailed because of my whatever it is.
I agree, Mario. My son is in
Yeah.
university as well, so I tell him the same thing.
See, the only
Like
thing
honestly,
is,
you just don't have the time. That was me. I used to
Good.
go to practice at 6 o'clock, and I used to be leaving out of study hall like around 10:30, 11 o'clock in the night.
No,
Where you
you
have time
don't.
for a few minutes.
Look, between
Well,
classes
trust
and
me.
study and projects, you don't have time to be messing around with chicks and little pom-poms and all that.
Wow.
Even though a lot of even though a lot of college guys do that, it's a common problem. But for those of you who really spending your hard-earned money or your parents' hard-earned money, there's just no time to play. It's very serious business. I can
Oh, you're
assure
trying to
you,
say scholarship.
somebody will be there long after you graduate. Okay? Because guys are easily distracted. A lot of guys have lost their futures fooling around with,
this is very true.
unfortunately. All right,
You know,
let's see if we could work that into the inventory chapter. Ah, boy. Okay, man, when my sons were in college, it was a nightmare because I'm like, Lord, please don't let stuff happen. They come back, but they don't. Well, Dad, I don't think I need college anymore. I've met this girl, and she is really all that and a bag of. That's one of those conversation you don't want to hear, but it happens. Okay, and sometimes vice versa. All right. All right. So inventory management. How does that work? First of all, we all should know, for example, that we have service enterprises and we have merchandising, which you saw earlier, and we have manufacturing. For a manufacturing company, you'll see that manufacturing companies have three types of inventory, and they are, anyone?
raw materials, work in
Mhm.
progress, or process, sorry, and finished goods ready for sale.
Finished goods. And further down, you see we assign values to them, dollar values year over year, so that we can have an indication of what the total cost of the inventories are. What is the total cost of inventories in 2008?
17,478.
Is it more or less in 2007?
It's more. I'm sorry, it's more than 2007 for sure.
Yeah, it's more than 2007. All right. So that's the initial raw material. Every manufacturing firm has 3 types of inventory, and they are the 3. And every year, when we are closing the financial statements, we have to assign a cost to the inventory that we have left in the organization. Okay? And this is where inventory costing comes into play. Okay? All right, so let's see where the madness begins. All right. Nice little diagram. If you have that in your textbook, please look at it. It's really just to talk about the things we're going to talk about. Okay? Some people remember things a little better through diagrams. Other people remember things better from reading. Well, let's look at the diagram on my screen. I don't know if it's in your textbook. It should be. Sometimes they leave out some really
Yes, it's
important
there.
stuff. You have it, great. If you look at the first box, it has 2 inventory processing systems that you must remember. The first one is a periodic system, and the other one is perpetual. You need to know by definition what they are, because it might come up as a short answer, and you can get 2 easy points, or you can lose 2 points easily. I've seen persons in the first test, they just kind of lost points for little simple things, probably because they just didn't remember, they didn't really look at it, or whatever the case might be. But so be careful. Those things, and usually my short answer questions and definitions are pretty straightforward. They tend to be questions related to those things in your textbook that are in color, like especially black, okay, and blue. Things in color, I like to ask definitions and short answer questions about. That's a little hint for those of you who are still trying to figure out how to review. Remember, everybody reviews differently. All right, so we have the periodic system of inventory, and we have the perpetual system. You'll find out what they are soon. Okay. Then we have 1, 2, 3, 4 inventory costing methods that somebody said is a nightmare somewhere. But we look at them. The first one is called the specific identification, followed by the average cost, followed by FIFO, and then LIFO. Sounds like a foreign language at the moment, but eventually it wouldn't be so far. Okay. Inventory valuation has 2 methods. The first one is inventory at cost. The second one is market. Okay. And then in brackets, we have if lower than cost. And we'll find out what that means very shortly as well. So those 3 boxes you need to be familiar with. Okay. All of them go into the matching rule. Now, what is the matching rule? In accounting, the matching rule is this. Whatever sales you make in an accounting year, all of your costs and expenses should be related to that year. Okay. In other words, we shouldn't use expenses and costs from last year or the future, which has not yet come. Okay. Matching principle says whatever sales you make this year, whatever cost you incurred to make those sales, whether it's utilities or inventory or manufacturing or whatever the costs and expenses are, they must be related to the current year in which you made the sales. That's all that means. Okay. And then once we put all of this stuff together, we go to the next box, which is called cost of goods available for sale, which you'll see again later. And that's only basically the inventory that you have at the end of the manufacturing process. And then finally, what do we have? Out of the cost of goods available for sale, 2 things happen. We sell some, and we have some that remain. The goods that we sell is called what?
Cost of goods sold,
And the goods that we have remaining is called
Cost.
ending inventory.
ending inventory. And at the end of the year, accountants have to assign a dollar amount to the ending inventory using one of the 4 methods that we saw earlier. What are the 4 methods again?
Specific identification,
Yes,
average cost, first in,
yes,
first, and last in, first out.
yes, yes, yes. But the key is to know those 3 boxes. And the key is to know that the goods that are finally produced are either sold or remain in inventory. Those that remain in inventory, we apply one of 4 costing methods, all of which are acceptable in accounting, in order to assign a dollar value to them. See that? Once you start breaking it down, it isn't as stinky as it looks initially. All right. In the test number 1, we're asked persons to write out a couple of ratios. Some people did it pretty well, and other people didn't even get the first one, working capital, which is the easiest one. What's the ratio for working capital, anyone?
I think it's net sales. No.
Capital,
Yeah, working capital.
Total something over total no. Total something over total
it's
something.
current assets minus current liabilities,
Ah.
Current assets
minus the
minus
current liabilities.
current liabilities. Okay, absolutely. Now, again, some people didn't have any problems with most of the ratios. They may have gotten stuck somewhere at once. And other persons like they struggle from the beginning, even with the working capital, which is usually considered to be the easiest of the rest of them. Okay, so little things like that, not unusual. Okay, first time stuff it gets it's weird. Period. Okay, for sure. It's like a first kiss. First kiss is usually really very bad, or very awkward, or very something. So it's kind of like that.
Uh-huh.
But then the more you practice it, yeah, the more you read it, study it, practice it. Oh man, this is great. All right. So for inventory, we have a formula again. See, you cannot escape formulas from one chapter to the other, and formulas are still there. The first formula we encounter for inventory is called what?
Inventory turnover.
Yes, and notice the formula, simply cost of goods sold, which we got from the last box earlier. Remember when we looked at that up here? See, cost of goods sold divided by what?
Average inventory.
Average inventory. Simple as that. But it's only simple after you learn it. Like if you don't really commit to stuff like that, man, that'll go over your head. And you want to, did we actually talk about that? Did I actually read that? Where? So cost of goods sold divided by average inventory. And it makes sense because inventory turnover, what do you think that means?
Inventory that you sell.
Yeah. How often inventory turnover means how often in 1 year do you sell all of the inventory that you produce or manufacture? Absolutely. And the only other thing, once you learn that formula, is to find out how to calculate average inventory. And it's no different from any other average. You take the beginning inventory plus the ending inventory divided by 2. And whatever you get, you do the math. So what is the inventory turnover for this company based on our calculations?
4.4 times.
Yeah, so the inventory that is produced is sold 4 times completely during the year. That's all that means. That's important to management because it tells them that inventory is turning over fairly quickly. Okay, suppose that 4.4 was less than 1, like 0.5. That means that inventory is not what?
Selling.
Yes, not selling. That's why these ratios are important, so that management can then look at them and say, wait a minute, 0.5? What the hell? What is this product? Why are we even making that? What is our marketing people doing? Are they not selling this fire to the devil? And so on, right? That's why we do this stuff, and that's why we need to know how to do it, or certainly pay people who know how to do it. Yeah, that's same accountant. All right. So far, so good. Now, notice I'm just kind of scrolling down very casually because so far there's just information that you should just read because you should. Do not try and take any shortcuts. If you do, you're going to run into trouble. Okay? Read the information, and then whenever you get to what we're going to discuss, you'll be like, oh, that's all that was? All right, let's look at example 1. Ending inventory correctly stated at $5,000. And what are we looking at? How inventory impacts the income statement. Anybody remembers what the income statement is? What's the formula for income statement? Net income.
Total,
Revenue minus expenses.
Yeah,
Ah.
revenue minus expenses, yes. Provided that revenues are greater than expenses.
Yeah.
Okay. All right. So now that we know that, we have a scenario here where we're trying to determine the impact of inventory on net income. Well, let's look at the first example. In this first example, the beginning inventory is how much?
6,000.
6,000 plus the cost of purchases of how much?
29,000.
29,000. So the goods that we have available to sell totals
35,000.
$35,000. And that's the cost of goods sold in that year. Then on the right-hand side, we have the income statement for the year. Net sales equals
50,000.
50,000. And what is that next transaction?
cost of goods sold,
Which is how much?
30,000.
30,000. Which means we get a gross margin of
20 grand.
$20,000. Minus expenses,
16,000. Brought it to 4,000.
$4,000.
Income before taxes. Wow. Dread. Take a
What about,
tax.
what about income before taxes?
That's kind of a small amount for a company before taxes. After tax, that's gonna. So, like, is the set amount of income tax 30%?
No, it varies
Oh,
by
maybe.
country. Of
Okay.
course. Okay, that's not universal.
Okay.
All right. So in this example, notice on the cost of goods sold side, we end up with cost of goods available for sale of 35,000. And what happens next? We subtract what from the 35,000?
5,000.
5,000 of ending inventory. That
Mhm.
means out of the 35,000 units that were made, we sold how many units?
$30,000 worth.
$30,000 worth of goods, because we have 5,000 remaining in inventory. So that 30,000 that we
So
have, cost of goods sold, is the 30,000 that is deducted on the income statement. Does everybody see that?
Yeah,
Yeah.
except but
Question? Okay. So that 30,000 in the income statement is the same 30,000 that we got from the cost of goods sold calculation. Okay. Now that cost of goods sold calculation pretty much remains the same throughout. It doesn't change. Only the dollar amounts change. So if you can learn those steps, it'll be very helpful. And some students like, may have to learn another set of steps. Yes, unfortunately you do. But they're not difficult until you do not address them. Once you address them, you'll find they're not hard at all. For example, for cost of goods sold, we can almost say it without looking now. Beginning inventory at the beginning of the year plus purchases during the year equals the total amount of goods we have to sell.
right.
Minus the inventory at the end of the year
Mhm.
after we take stock equals the cost of the goods sold.
Okay.
Don't presume that I walk around with that crap in my head anymore. It's just that once you get it organized in your mind, it's pretty easy to manage. It really only becomes difficult if you don't really approach it at all. Okay, so that's the cost of goods sold side of the ledger, and now we're transferring the cost of goods over to the income statement, which is $30,000. for a gross margin of 20,000 minus expenses, which equals $4,000 in net profit. Okay. All right. And this is the example where inventory is correctly stated at $5,000. Now, what happens if it is incorrectly or overstated by 5,000? What does it do to the income statement? Well, let's have a look. And the whole idea behind this discussion is for students to see how important it is to come up with the correct numbers or dollar values for inventory. That's why we call it inventory costing. Because if you mess it up, you'll mess up the results in your income statement. For example, let's look at example 2, where ending inventory is overstated by $3,000. All right, same data until we get to what? Ending inventory. How much is it now?
8,000.
$2,000.
Which is 3,000 more than it was previously, correct?
Correct.
Because we know it should be what?
5.
5,000.
Mhm.
So if we overstate it or add 3,000 that shouldn't be there, then what happens to our cost of goods sold figure?
It
Decreases.
decreases.
It goes down by
3,000.
$3,000 because we know it should be how much?
30.
30,000.
30,000. So with the overstatement of what? Ending inventory, all of a sudden cost of goods sold is what? Understated, correct?
Yes.
Mm.
By how much?
3,000.
3,000.
$3,000. Now here's the problem. That 27,000 then is now transferred to the income statement. So we have net sales again minus 27,000 instead of
30.
30,000. What does that do to net profit? Increase it or decrease it?
It
Increase.
increases it.
Increases it, but now we know that that increased net profit is incorrect, don't we?
Yeah.
You do
Because it is now overstated by how much?
3,000.
3,000.
Absolutely. So if you hear anybody saying, hey, we can come up with any number for inventory, whatever bucket goes, you should be able to say, not really. There is a problem involved in doing it incorrectly. See my point? And this is just a little itsy bitsy measly few bucks. Imagine a multi-million-dollar company where you don't do it right. See my point?
Yeah.
Then we can see the problems right away.
Mhm.
On the other hand, example 3 shows inventory being understated. So instead of it being 5,000, it's 3,000. Cost of goods sold is equal to what?
33.
33,000, which we carry over to the income statement. And so now our net profit is showing what?
1,000.
1,000.
Decrease.
How much?
Well, the understatement of
1,000.
3,000.
Mhm.
Yeah. So now net income is now understated from its original position by how much?
3,000.
$3,000. Okay. So we have 3 scenarios where we have the correct determination of inventory at 5,000. Then we have it being overstated, and then we have an example of understated and the devastating effects that it will have on the income statement. Remember, we're just using some little itsy bitsy powwow numbers, but in the real world, they could easily be millions, and in some cases even billions. Imagine making an error there. I'm sure they do make errors. Hopefully, they have not been discovered yet in some cases, or they turn out to have an effect that is not a whole lot of money. But whenever it does go wrong, a heap of money, a heap of incorrect information in the income statement comes to light. And that's never good. Okay. Okay. So what is in this little jack in the box in year 1 and year 2? Well, we saw those effects. In one case, Cost of goods sold goes up or down, net income goes up or down, depending on whether it's overstated or understated. Net income is going to be affected by the result. And the one thing you don't want affected in your financial statement is your net income, because it tells your bankers and everybody else exactly what your financial position is, especially from a
Yeah.
buying and selling expense perspective. Okay. All right. Believe it or not, like anything else, all of that is just priming you for the actual discussion. Believe it or not. Notice on page is this? 358, well, for my text, you guys will see. On this page that we're looking at, we are told that inventory cost includes three things. And the reason why we're talking about inventory cost, because every year, inventory has to be assigned a cost. How do we do that? Specific ID, FIFO, FIFO, and all the other good stuff for evaluating inventory. And all of those are designed to come up with a reasonable, rational cost for inventory. Because we saw already, if inventory dollar amounts are overstated or understated, it'll create a nightmare for financial statements. Okay. So they must include three things. What are those three things?
Invoice price, less purchases, discounts, freight in, including insurance in transit. What do they mean by that? What do they mean by insurance in transit? Like the goods in transit?
Yeah, for example, when you purchase goods abroad and they're shipping them to you, the sensible thing would be to insure them in case the ship goes down.
Okay.
Follow?
And then applicable taxes and tariffs
Indeed. In other words, for our purposes, duty
and
and
VAT.
tax. Yes. Okay. The cost of all of those three things together is what we add together and refer to as inventory cost. So what constitutes the total cost? The invoice price, less any discounts given to you, the shipping price, which is free, and insurance if it applies, and also whatever taxes and tariffs and duties that you pay. For example, if you are selling used cars, if you spend $200,000 for the used cars in the United States, that's only the invoice price in the United States. When you bring those cars to Nassau, you will have to take that 200,000 and add the freight cost to get it here to the 200,000, add the insurance cost that you pay for the $200,000 vehicles, and then any duty that's just paid to customs and VAT and whatever needs to be added to the original $200,000 cost. Then when you add all of them up, then you come up with the new and correct true cost of your vehicle or your inventory. Everybody see that?
Yeah, that's not fun.
No. Well,
That's
it's not fun for the buyer.
Yeah.
But if you're the seller, for example, if you go to Miami tomorrow, Miami still exists?
I would hope so.
Bahamians don't go to Miami much, they tell me. Is that true? Not anymore.
Still on. Still on.
Only Florida.
Yeah,
Still on.
Bahamians still go to Miami?
Still on.
Yeah?
Apparently Texas and Georgia's the new spot though. I don't know why. But yeah.
Texas and Georgia?
Come on.
Well, maybe, yeah, that's interesting. And Fort Lauderdale.
Ah.
Those three places, for some reason, Bahamians tend to be going more than Miami. Back in the day, everything was Miami. You weren't going to Miami, you might as well commit suicide because everything was Miami, but not anymore.
This when the economy was booming. Eh?
Things were just different, interestingly enough. But then, of course, Fort Lauderdale started to get more popular because Miami became overcrowded with everybody, including too many Bahamians, so Bahamians were talking Bahamians even. If they don't want to, they don't want to see Clinton, they just wouldn't go to Miami airport, they go to Fort Lauderdale.
I don't like Miami though.
Why not?
I like
It's dirty.
Texas. I like
You know
Texas.
how expensive it is to live in Miami?
It's dirty.
It's
Yeah.
dirty. It's
It's
a
a
ghetto.
ghetto area.
Now, who made it a ghetto, you think?
I think the gentrification around Miami forced people to pretty much live in a cluster.
Who made it a ghetto?
The people that live there.
People live
Like
there.
who? You mean the white folks?
I would
Everyone
say the
No,
white
except
people.
Eurocentric
no,
Americans.
a lot of, yeah, Spanish, Haitians, a lot of
No,
Caribbean people
I
in
know. Back
Miami.
up. Once upon a time, when I was a boy, and my mom would take us to Miami. Miami was fabulously clean and structured. So, who's responsible for making it the mess you say it is?
Y'all who been there.
A lot of college students too. Like they just come down and just mess it right up, if you ask me.
No, college students only come once a year. The damage that has been done is not a once a year deal.
Very true.
But it's like we're afraid to say that people of certain color and nationalities are not really that neat and clean, are they?
Yeah. You said it. You said it.
Because I'm not afraid to say it because it's a fact. Now, don't get me wrong. People get upset when you say it, but the truth is the truth. Okay? Even in Nassau, I passed
No,
a
no, no. Also, don't forget now, Bahamas is the reason why Miami's even built on that type of structure now. So
well,
it can't be Bahamas who make it dirty.
no, it's not Bahamians. No, hell no. Bahamians are not in the same class as nasty Black Americans and Latinos and others. Okay? That's a whole
Yeah, Black
uh,
Americans not see for true though.
okay?
You're
And Latinos. And other Black people who come from other countries other than that country. So this whole thing is very interesting about the dynamics. That's my whole point. Okay. Just some food for thought. I just thought I'd throw that out. It's amazing how once upon a time Miami used to be the mega place to come. It was nice, clean, organized. Everybody was, walking through Miami airport. Everything was driving through. Everything was really nice. Now it's all whatever. In the last 30 years alone, unfortunately. Okay. But I was about to say, even certain places in Nassau, when we fix it up, certain people break everything down.
Mm-hmm.
In fact, we can't even keep a street sign straight anymore. Looks like some people just run up and kick it and dent it or jump on it and bring it right to the ground just for the hell of it.
Is that bad?
Where have you been living? Or maybe, like my Grammy say, you can't see yourself. Anybody ever heard that? Can't see yourself? Old people. But they knew exactly what they were saying. Everything they say is true. All right. So how do we assign cost to inventory? I just told you the invoice price, the shipping price, insurance, and any taxes that are paid on them. I was about to give you the example. If you bring in a car from Miami, where you pay $10,000 and bring it to Nassau, after paying duty free and all the other charges, would you sell it to someone for 10,000?
No.
What would you sell it for?
Landed cost and then some.
You add all your costs and then your profit, wouldn't you?
Yeah,
Absolutely. But you can't add profit until you find out everything you spend on it.
landed cost.
That's what that list is all about. Okay? That's how we determine inventory cost. Period. Or even the cost of goods in general. Period. We have to add all our costs. Some people even add hotel room and taxi to it. Did you know that? Just to
Well,
make
agreed.
sure, just to make sure, no, just to make sure they don't lose money. You're supposed to add everything.
That's business.
Those who don't add it lose money. They just don't know it.
Exactly.
See, remember that word, ignorance? That doesn't mean you're stupid. It just means you don't know. It may mean that you're stupid but not trying to find out. But you would want to add all your costs so that you don't lose any money. And hotel and taxi and food and everything is part of your cost. I know it seems frivolous, but what can I say? You don't have to add it in. It's just that when you resell it, you will not recover those costs. Okay, and for some people, maybe it's not a big deal because they recover it in their huge profit markup anyway. How about that? All right. Merchandise in transit, you need to know what they are. There are some specific definitions, FOB shipping and FOB destination that you would read. Please know the difference between the two. Examiners love to ask the question on what's the difference between FOB destination and FOB shipping points. Anybody knows the difference?
Yeah.
It's more so where the title passes, meaning who owns it, because
Mhm.
the ownership is passed at the shipping point, or whether the ownership is passed at the destination.
Well, again, ownership is a whole other discussion.
But it's who pays
but-
the
Yeah,
shipping
it's who
cost?
pays the what?
Who pays the
Shipping
shipping
cost.
cost?
Yeah,
That's
who
what it
pays the
speaks to who.
shipping costs?
Yes,
Right.
either the buyer or the seller.
For the seller.
Now, FOB shipping point, who pays the shipping cost?
The buyer.
The buyer.
Buyer.
The buyer pays it. Mhm.
FOB destination, who pays the shipping cost?
The seller.
The seller.
Okay. If I ask out in the final, please just put that. Don't put anything else that looks funny. Just as simple as that. All right. The law of cost of market rule, please read it. In other words, the rule is simply this. Whenever we're looking at inventory cost or valuation, we always go with whichever is lower. If the market value of the product is lower than the cost, then we go with the lower one.
Okay.
For example, if you use the costing method we used earlier, a minute ago, and you come up with $3,000 cost, and the market value is $2,000, for accounting purposes, you must use the lower of the two, which is,
2000.
okay,
The market.
the lower of the two. In this case, the market is the lower. Normally, what should be lower? Cost of market,
The cost.
of course, which means that most times you'll be using cost, right? As your inventory amount on your financial statement. But every blue moon, something might happen and cause the market value to fall below cost. If that ever happens, we go with the lower of the two. Doesn't happen much.
And their reason for doing that is like to avoid overstatements, right?
Correct. Accountants are very conservative. We always want to go on the lower end rather than jumping off the deep end.
Mhm.
Okay? Even when we're making estimates, we like to make conservative estimates, not crazy estimates like some appraisers do when they walk in a particular area to appraise somebody's property. They come up with some crazy and outrageous estimates. Sometimes they say it's based on their mathematical calculations and all that. And sometimes it is. But God forbid, sometimes it's not. Somebody just pulls something completely from their gut and throw it in. Well, we shouldn't pull from our gut, but what can I say? Crap happens. All right. Okay. All of this now is warming us up to look at the various inventory costing methods. And the first method we're going to look at is inventory costing under the periodic inventory system. Remember that word earlier? Anybody remembers that word earlier?
You do.
Okay. Then if you remember that, then you remember the 4 different types of inventory costing methods that we saw earlier. Has anybody figured out the difference between periodic and perpetual yet? Like, if anybody rushed to that section and read that?
It'll be established out
Yes.
from the last chapter.
I thought
Okay.
so. I'm just reviewing. What's the difference?
The
One,
periodic system, inventory system is reviewed periodically, like once a year at the end of the fiscal year. And
sir.
the perpetual one is the system updates as you sell an item.
Absolutely. That's the difference. Periodic, you take inventory once a year to come up with the cost. Perpetual inventory is updated or taken away each time we sell an item, and so the cost is updated immediately.
Okay.
Which of the two systems requires 2 entries be made when we sell a product? You remember that, right?
Perpetual.
Perpetual. Which 2 entries? Does anybody remember?
That's
You have to
so,
make
what do you call
journal
it?
entries.
Yes, you do revenues you credit revenues and debit cash or accounts receivable, and
Okay.
then you credit inventory and debit cost of goods sold.
Thank you very much.
Oh,
One question for you, Mario.
right.
How the
I
hell
missed
you
it.
remember all that crap?
You see how I remember?
Yeah,
I tell you, man, this is the path I chose.
good. That's what I was hoping to hear.
That's it, Mario.
Okay? It's all about commitment. All right? And
And
those
I still
now some people can get away and get all kind of stuff and do all kinds of crap without commitment. They just commit to some other things that they shouldn't commit to, and then all of a sudden they have stuff. But that's not really the route the average person should want to take. Most of us want to take the correct route, study, work hard. We don't want to walk around with people's bag, dropping off their children to school, sucking up, making deals, doing crooked stuff, getting quick money. Most of us don't really want to do that. So whenever you don't want to do that, you have to commit to hard work. And the hell, what's wrong with that? Nothing. All right, so now we into the 4 inventory costing methods. Doggone it. And looks like we're gonna get through a couple of them before this evening is over. Man, time passes quickly. Does anybody know which week we're in?
I was sorry. I was thinking about it.
I
It's
think
either
it's
10 or 9.
It's 10.
It's 10 already?
Yeah.
So you should listen to whoever said 10 and update your file.
Dread, so let's hold on what today is.
We have 4 more weeks.
Oh
4,
man, we have 3 more weeks and then the exam.
Well,
Allow
still
you 2
4
more weeks.
Mario.
And then the exam. So that'll be if today's the 21st. So the exam is on the 11th then? Or the 4th?
well,
I'm on the 18th. The 18th is a holiday.
the 18th is a holiday?
Yes, sir. That's Easter Monday.
Dread.
Holiday.
So the week after,
Uh,
Well, that's Tuesday.
no, students don't have holidays.
no, but business be closed, so we're not on holiday, but
Oh, BIFs will be locking you out.
yeah, but we're not on holiday.
So what do
We
we do?
just-
'Cause Monday is a
Well,
holiday.
well,
That's
no,
the-
if BIFs is closed, then you can't go and do your exam.
Oh, okay.
Yeah,
That's what
but
happens.
Tuesday.
Which means that we'll have to arrange to do it like maybe the next day. The next day is what day?
Or Tuesday,
Uh,
19th.
Tuesday.
19th. Yeah, let's make a note of that.
Yeah,
Tuesday the 19th. Let me discuss that with BIFs. When we come back again next week, just remind me of that so that doesn't go over my head with all the other 1,000 things that are going on one time. But yeah, make a note that tentatively will be that Tuesday, since the 18th is a holiday.
Yeah,
Okay, that's Easter holiday or that Easter holiday weekend?
Easter Monday, correct.
Wow. Okay, good thing we said that, man. It's nothing like a little conversation sometimes. So please, everybody, make a note of that. The 18th is a holiday. You cannot go into BIFs anyway. If the examination is virtual, we could still do it, but it is not virtual, so it will be the following day. Okay, please make a note of that. I sure as heck hope I remember that as well. All right. So which method are we going to, before we get into the methods, let's look at our data. Okay, our data. Everybody take a moment and look at the data real quick before I say anything else. Okay. Ah. Everybody take a look at it.
Yeah.
Yes. Okay. So what do we have? We have some information that occurred in April regarding inventory. Please keep your finger, your mind, your thoughts on this data, because everything else we do in terms of the 4 inventory costing methods will be related to this data. So don't ignore it or forget it. Otherwise, you won't know how we got certain things later on. Okay. On April the 1st, well, let's break it down, because a lot of times students get stuck because they don't really go through the breakdown. They just look at the number and say, oh, hell, I don't really want to be bothered with it. And then we have a brain shift. And once we have a brain shift, then we stop checking for it at all. Then it looks like a bunch of gobbledygook. Then we get angry with God and everything else. And then things get really hairy. So let's break it down, see if we can simplify it, so to speak. What happens on April the 1st?
160 units at $10 each.
Yeah, we have 160 units in inventory on April 1st, which means that they probably came over from March what?
31st.
Sure. Whatever was the inventory the month, end of the month, the previous month, becomes the inventory for the new month. It's important to know that, otherwise you get mixed up. See, folks? It's nothing like dissecting information and getting it early. Okay? It's like trying to do math before you learn your tables. Anybody ever tried that?
No,
Trying to do math without learning your tables is doable, but it's much harder if you don't know your tables, isn't it?
it is.
Especially if you don't have a calculator. And even then, knowing your tables helps you do a million things mathematically easy. That is a nightmare if you don't learn those bloody tables. It's the same thing. Once you get down pat what's really going on, then you're like, oh, okay. So April 1, we have beginning inventory of 160 units at $10, which equals,
1,600.
1,600.
okay, so far so good. What did we do on April the 6th?
Purchase more goods.
Okay, how many?
440 more units at $12.50 each,
Why wasn't it $10?
because the cost probably went up.
Cost always goes up. You go to Super Value 1 week, it's this, and next week is that, isn't it?
Yes, sir.
Mayonnaise, Hellman's mayonnaise, yeah.
Yeah. Yeah, she knows exactly the item as well. Hellman's mayonnaise went up. See, same principle. Same principle. What happened on April the 25th?
We purchased a next 400 unit at $14.
See that? So this is an inflationary environment, correct? Correct? Prices keep going
Yes.
up. Wherever you live, the prices keep going up over time. It's an inflationary environment. Wherever you live, the prices keep going down over time. It's a deflationary environment, which you don't see too often. All right. So as at the 25th of April, how many goods do we have available to sell?
1,000.
At what cost?
12,700.
So far, so good?
Yes, sir.
Okay. Then we sell how many units?
560.
Okay. And if we sell 560, how many units do we have at the end of April in inventory?
440.
All right. So now that we've determined that, we can now go and look at our various costing methods. Okay. The first one we look at is called the specific identification, and they tell us under which conditions we use this. If you're selling expensive jewelry, expensive vehicles, and paintings, and this kind of stuff, specific identification is the best method because there aren't too many items involved. We can actually count them on our hands and toes sometimes because of their high value. Okay? Specific identification. That means that we can identify each and every one very specifically. So under the periodic inventory system, specific identification method, let's do our thing. Well, how many units of inventory do we have at the end of April?
440.
All right. So the first set of units out of the 440 remaining is represented by how many units and at what cost?
100 at 10,
Okay, and then,
200 at 12.50,
and finally,
140 at $14.
does anybody see why that is so?
This is what I need you to, I need you to put in
No,
perspective.
not entirely.
Why not?
I try to make the connection right now.
Okay, then do me a favor. That paragraph that begins the specific identification method, read that for me, for us.
The specific identification method identifies the cost of each item in ending inventory. I got that. It can
Okay.
be used only when it is possible to identify the units in ending inventory as coming from specific purchases. For instance, if the April 30th inventory consisted of 100 units from the April 1st inventory, 200 units from the April 6th purchase, and 140 units from the April 25th purchase, the specific identification method would assign the cost as follows.
Now, do you get it?
Yeah, so this is only an instance, so they give it to you. They tell you, because I understand it, they give you this top paragraph. I
Correct.
thought, I was thinking you had to figure this out, but you,
Well, if they gave it to you, how did they get it?
yeah, that's
They
what
figured it out.
They figured it out, but I know what you mean. And here's what I mean. Make sure when you're reading questions on this, you make sure you read everything to see if they gave it to you or you have to figure it out. Because
So,
if you don't do that first, you're gonna be stuck.
yeah, so they tell you here, so you could see April 30th inventory consists 100 units from the April 1st inventory.
But
So
see,
that's the 100.
remember, how many units did they sell?
560, eh?
Right, and they have 440 left. But when they go into the inventory in the back, let's say they're selling jewelry, right? And they count each piece of jewelry was left. They find that they have what? 100 pieces of jewelry from the April 1st inventory left.
Right,
Because remember, you can't determine how people are gonna buy them. So after all the buying and selling is done, they go in the back to see what's left. And when they count,
is this assuming that all units are the exact same thing?
no, they don't have to be the same thing.
Okay,
They could just remember, in this example, the 100 units that are left, they determined that it came from the April 1 inventory. In other words, they were what came over from the previous month. That's
yeah,
what's
from the
left.
31st of March, yeah.
Correct. Okay. Originally, how much came from the 30th of March? Over.
Originally,
100.
400.
Originally,
I think it was like
Oh.
400.
how much?
I think it was like 400.
Really? Let's have a look.
160.
160.
160.
Yeah. So we
Okay, let's
sold
do that.
60 out of the 560 that was sold. 60 was sold out of the April 1st inventory,
Kiss
leaving
my
100.
foot. Doesn't magical things happen when you apply? See what I mean? Exactly right.
So why
See-
separate it? If at the end of the day, we have 440 in stock, why separate and say 100 out of the 160 from March was sold?
Because
The price
each one of
difference.
them have a different cost.
Yeah.
And if you're going to come up with the correct cost of ending inventory, then you have to come up with each one and their cost individually to
Yeah.
come up with the correct cost amount and ending
Yeah, I
inventory.
got that. Where I got stuck was just determining how much come from each inventory, but they gave you that. I'm just saying if we would get a question where how do you determine?
Oh,
The
no,
question-
no, normally that would be given, but in the
Okay,
real
that's
world,
fine. Okay,
no, in the real world, you go in the back and take stock.
okay, but in the question, they'll tell you exactly how much come from each, so you know how to price it, because I get all of the other stuff.
Yeah. They'll
Okay.
tell you. But
Okay.
I'm telling you, in the real world, they get it from taking stock.
Okay, understood.
All right.
Okay, so boom, right? I don't want to be the one to slow everyone else down, but I just want to be sure. So like, let's put this in like a scenario thing, right? But the same thing we put up on the screen now, it's like 100 units, 200 units, 140 units. Let's say a sports center, right? If they have something for April 1st, 100 units, would it be like in their warehouse, they have like a section for rollover inventory? So like they would have 100 units left in the rollover inventory section. And because it's rollover, they know, okay, each of these was purchased at $10. So we have to sell it in a certain way for markup. And then like where they have the 200 units, they have a section for that specifically from the things that were bought on April 6th. And then so on and so forth. Like, is that like how it would be in the real world in that scenario? Or
Yeah, that's one example. Because remember,
Okay.
these are typically high net worth, high end items. So
Okay.
if you follow, if you have, let's say you have a certain type of jewelry that you have purchased at $10,
Mhm.
of course that could easily be $10 million each, right?
Mhm.
But yeah, you can have them separated into different categories so that you'll know what was sold out of that category and what's left.
Okay.
Or you could simply have your accounting record set up so you could see what was sold out of that inventory and what's left.
But primarily speaking, the reasons why these three different costs have to be separated is because the managers need to know how to price it so that they could have a markup. Yes.
They need to know what the cost is so that at the end of the financial year, the income statement will not be overstated or understated, which is
It could be.
completely different from markup.
Okay. But so that it could be fair, we'll just call that fairly represented.
Yes.
Boom. Okay.
Okay.
Now we could.
And the reason why we call it specific ID, because depending on the nature of the product, you can identify them individually. We'll see very soon that all products and inventory cannot be identified individually. Doesn't make sense. It'll take you forever and a day. Okay, so then we come up with another estimating method. Specific ID, you don't have to estimate, you know specifically what it is. You go and count them times the cost, and you come up with your total cost.
Okay, all right, got you.
All right, so that's specific ID. What's the next method? Well, before we move on, let's first of all show that the 440 units on the specific has a total of what? Total cost of?
5,460.
All right, so if we go over then to the next side of the fence, we can see that our cost of goods available for sale is equal what?
12,700
12,700 minus,
minus the April 30th inventory, which is 5,460, and the cost of goods sold is 70,240.
yeah, the ending inventory for April is
5,460.
exactly, which means the actual cost of goods sold for that month is 7,240. Okay, so what we're showing in this first example is calculating the cost of the remaining inventory and then subtracting that cost from the cost of goods available so that we can come up with cost of goods sold. Very simple once you get it. Okay? So keep that in mind. On the left-hand side, we calculate ending inventory. On the right-hand side, we calculate cost of goods sold. And the formulas are very simple. Once you learn them, they're a nightmare if you don't. All right, second method, the average cost method. Well, average cost is supposed to be simple. Average anything is supposed to be simple. That's why we like to average everything. On average, it's, see, like that. Well, on average, it's, this is easy way out. Well, let's look at this example. Look at the formula for average cost inventory. What is the formula?
Is the cost of goods available for sale divided by the units available for sale.
See how
Equal
simple
to
that
average
is?
unit.
So the cost of goods available is for sale is how much?
12,700 divided by the 1,000 units is $12.70.
Where did the 1,000 units come from?
Because that's initially, the 1,000 units is initially, that's the goods available for sale initially.
That's the total amount.
Initially,
Yeah.
where'd you get that
That's the
from?
total amount for the month. That's the amount of units, the total amount of units purchased or an inventory for the month.
How did we arrive at that total?
Because that's what we brought over March 30th, 31st, and what we purchased in the month of April.
Okay. See, you're having a big time, very straightforward and correct conversation about it now. This thing that was a big old monster.
No, that's only one.
Doesn't matter, every monster you count is one monster less, correct? Correct?
Yes, sir.
Okay, way to go. So the average is the easiest of all. Take the cost of goods available divided by the number of units, you get the average cost, and then what do you do with it? What do we do with the average cost? Well, we take the ending inventory, because remember, in each case, we're just trying to find out the cost of ending inventory, don't we, first? So the ending inventory in units is how much?
It's 440.
440, and the average cost is?
It's 1270.
So the cost of ending inventory using the average cost method is equal to?
5,588.
Once we know that, the cost of ending inventory, then we can go down and find cost of goods sold again. What's the formula for cost of goods sold?
Cost of goods available for sale less ending inventory,
See that?
which brings you to 7,112.
Couldn't be easier. Which method so far produces the lower cost of goods sold?
Specific
Specific
identification method.
Yes, specific method. Okay. So far, so good. Now, we come to the last two monsters that we use to calculate ending inventory estimate. Now, FIFO, which means what?
Price in, price out.
FIFO assumes, see, notice we don't say it's a fact because it's only an estimate now. Whenever an accountant uses FIFO, the
Mhm.
assumption is that whatever inventory came in first was sold first.
Oh, okay.
And technically that makes sense, doesn't it?
Yes.
Yeah.
Even though we know in practice, everything is so jumbled up, it doesn't work that way in practice, in real life.
Yeah,
But theoretically, it should work that way, correct?
the food store should work that way, for sure.
Everywhere, everywhere. Anything you buy first, you should try to sell first. especially
Correct.
the food store.
Yeah, especially in the food store.
But sometimes what happens, what you buy first, go to the back of the store. What you buy last goes to the front of the store. And so
That's
they
why
just pull
I
from the
shop in the
front.
back. I always shop in the back because I had a grocery store, so I know that trick.
Good.
I go to the back for everything.
Okay, because the back is what?
They're the
Where
stuff that
things
came in
get
last.
not, well, sometimes what's in the front is what came in last. And what's in the back is what you get weeks and weeks and weeks later when everything from the front is gone. So really, the thing you should have gotten first, they stored in first in the back, and everything that just came in, they put to the front, and so they start taking it from the front,
Shouldn't
which
do that.
means that the older products are sitting where? At the back,
Makes no sense.
of course.
Yeah, but you can't blame the parking boys for that. They know.
Yeah, they know because they
No,
train them how
no,
to do
no,
it.
no, the packing boys are not involved in that process. The only person to blame is the supervisor responsible for grocery disbursement. Because technically, nothing should come out to go on the shelf without the approval of the person responsible for the warehouse. And the person responsible for the warehouse are supposed to make sure that whatever comes in first comes to the front, whatever comes in last goes to the back. So that the initial stuff is sold first while they're fresh. And the stuff that
Now
are
I
being
understand
used
this.
is sold later.
I'm just looking at this now, I get it.
What do you
Oh,
looking at it now?
no,
Miss-
I was wondering how this 400, where they get this, because they only sold the last.
So
set of
Wilkinson,
400.
Right.
I see that one. I
don't
see.
I was reading this in some of my CFA notes where they usually use this FIFO to elevate their pretty much their quarterly returns, right?
Yes.
Oh, okay.
Doesn't that depend on whether or not it's during an inflammatory time or a deflammatory?
Inflationary.
Inflationary, sorry.
Yeah. Okay, yeah, for FIFO, FIFO usually occurs in rising prices, and so, yeah, the cost is gonna be reflected as higher because of the rising prices, okay? Under LIFO, it usually implies lower prices or falling prices, and so the result is different, but that's another matter for another moment, yes. But now, we need to get past the calculation of FIFO. All right, so how many units are left in inventory?
So 440,
440.
right,
Now, first in, first out means what? Whatever came in first was sold first.
right.
How many units were sold first?
So they're going to assume that 160, well, the first 160 was sold, because we sold 560, right?
Right.
This how I'm dissecting this.
Yeah, we did.
Sold 560. So
Yeah.
under the FIFO, they're going to assume that the first 160 was sold, right?
Number one, first 120.
Yeah, I'm just saying that because I'm looking at April 1st.
Not 120. The first 160 was
The
sold.
first 160, let me dissect it. They're gonna assume that the first 160 was already sold, so we can't charge $10. And they're also gonna assume that an additional 400 out of the second 140 was sold first. So they're gonna assume that only 40 is left out of April 6th purchase at $12.50, and the last 400 they purchased on April 25th was sold at $14 is still remaining. So the 440 that's remaining under this theory will assume that the last 400 they purchased is still there, along with 40 from the previous purchase.
Simple as that. And you
No,
guys
man,
try to
I
make me
get it.
feel.
You only
What?
get that? You know what? I couldn't catch that either. And while he was talking, I said, where they get this 400 from? And it clicked
It
to me.
was saying, Mama Ty, say it slow.
Okay,
please.
let me say it slow.
Yeah.
Remember now, there's FIFO.
Say
If their FIFO is assuming,
Wait a
Yeah.
minute. Wait a minute. Say it slow for your buddy.
okay. All right, Mario, you know, use my buddy. All right.
If you say it too fast, like the
Uh-huh.
way you normally talk, he's going to miss it. He's gonna go
Okay.
over his head and he's gonna have that bewildered look again.
All right, Mario, let me break this down for you, bro. All
I
right.
appreciate that.
So under the FIFO method, they
Mhm.
assume that the first sale or the first inventory was sold first. So
Uh-huh.
if we look at the first, if we go all the way back to all of the units, 160 units is our inventory brought over from March 31st. So under
Okay.
FIFO, 160 was sold, which means what? We leave with
Gotcha.
only 400, because remember now we sold 560. So if you take away
Okay.
160 from 560, that leaves 400, right?
Yes.
So then when we look down to April 6th, they're going to assume that that 400 came out of that April 6th purchase, leaving 40. You with me?
No, I feel like I have to look in the textbook.
Yeah, look in the
Because
textbook.
I look in on the
I
screen.
go
On the
in from
screen
the
ain't moving.
textbook. No, you can't go from the screen. I go in from the book because he's only
Yeah, that's what I'm
some of
saying.
people
I
show on the
looking at
screen.
the screen. On the screen ain't moving, so I go to the textbook. Which page is in the textbook?
And then
269?
on page 268 on the textbook, I'm looking at 268. This is the actual information that we got about this whole question.
And you're on first in, right? Okay.
No, I on first in, first out. I am on 268 where they showing you the breakdown of the whole inventory before we got
The
into
whole
the method.
data.
The
So
whole
you
data,
on the
correct,
inventory costs on the
Correct.
periodic.
correct.
Boom. Okay, I there.
Right. So when you look at April 1st, remember now we're dealing with FIFO. So under this method, they are going to assume that the first stuff that came in
Mhm,
was sold first. So
mhm.
if we sold 560, they're going to assume that number one, the inventory that came in from March 31st, which is 160 units, was sold first. So if we
Sold,
take
sold.
160 from 560, it's going to leave 400. You with me?
Okay, I am.
Right. So then now we're still with FIFO, assuming that the first in was sold first. So then we go to April 6th. 440 was purchased. Now
Mhm.
we sold an additional 400 because remember only 160, now 400, leaving 40.
And that's why the 40 leave. Okay.
And that's why we charging $12.50 for only 40. Because the 400 that leave now, it's got to be charged at $14.
Ah,
Because you with me now? So because on
am.
April 25th, they purchased 400. I couldn't
I
figure it
am.
out, but now I got it.
Listen, thank you immeasurably.
You need to go and study law now. Only lawyers measurably confuse the whole
I
court.
didn't get it either because when I was reading that, I said, what the hell is this?
Well, the problem is until you commit to it, that's what I said. It's the same as everything else. Once you start committing to it, then you start to see where you're going. But if you just start looking at things at the surface and panicking and trying to, get all uptight that it doesn't look right, even though you haven't even looked at it properly yet, then you'll always be all stuck. But the minute you start making a commitment, okay, for sure, just like somebody who you might thought initially is unattractive, when you really look at them again and
I
start
don't
seeing the true qualities in them, say, wait a minute, stop the madness. This is the person I was gonna not date. See my point?
Nope.
Kind of like that. All right. So under FIFO, the cost of ending inventory is equal to,
6,100.
okay. Once we know the cost of ending inventory, any accounting new person can calculate cost of goods sold now, which
Yeah, because you just subtract it from the cost of goods available for sale.
again, see that?
Oh,
Simple as
boy.
that.
I thought,
Once
wow.
you commit, boy, that's a serious thing. Just like getting married. Even if you get married and you don't commit, the marriage is going to be stinky. You have to commit. Same thing with FIFO and LIFO. All right, now watch this. That's FIFO, cost of goods sold calculation. What's LIFO?
Yeah, this is,
LIFO is the opposite.
let me see this now.
Think I got
Whatever came in last is presumed to have been sold first.
Wow, that don't make no sense.
Yes,
No, I
it
think I
does.
got that one.
I guess
think I got that one.
in some businesses it makes sense. Huh?
No, remember, we're in theory is different from in the real world.
Okay.
In the real world, nothing goes exactly according to this process, but we use this process to bring structure to an otherwise unstructured real world activity. How's that?
Yeah, so in this instance now, based on looking at this, the 400 that came in last.
And sell first.
Right, and then they took
Yeah.
an additional 160 from that. That's how come they get 280.
Yeah.
160 from that.
Yes.
It's the
Oh.
reverse. Yeah.
Yeah. That's it.
You do that mess in a minute. El malo.
Yes.
Yeah, it's just the
Now,
opposite.
let me say this. In the real world, this does happen. For example, if Super Value buys 50,000 cart crates of cream and put it to the back of the warehouse this week, right?
Mhm.
And they buy 300 crates and put it in front of that group next week. You think when they take out cream to sell, they're gonna go to the back to pull out from the back? No, they're gonna
They
grab
pull
from those that came in last.
Boom.
Okay,
Okay, so this last in and first out. I see what is happening
it
here.
does happen in practice.
Okay, so they jiggle that for, yeah, it's plain and simple.
Plain and simple.
Mm-hmm.
And I guess you figured out by now that that is probably gonna be a question on your final exam because it's such a valuable process in accounting. Okay? All I can say is be prepared to calculate cost of goods along with cost of goods sold and ending inventory using all 4 methods.
All right, I got you. So,
What can I say? All right. Okay. You know, you guys have been more than great. We are going to break there. I think this is a good point to break with this bloody inventory costing methods.
Yes, I
We'll
agree.
pick up and finish the chapter next week and then move into the next chapter. So if you haven't read into the next chapter, please, well, I know you have a lot of work to do.
yeah, you said there are grades when we hang up.
I am so I have grades to send. I have your paper
Yeah,
to
I'm waiting
send,
on mine.
makeup examination and homework assignment.
Okay.
Only the
So it
grade.
looks like I need to go and drink coffee now to stay up and do all that crazy stuff. All right. So those things are coming. Please remember the makeup exam deadline is which date? Anyone?
Thursday.
Thursday.
Yeah, let's get it right. Thursday. If you don't get it in by Thursday, you will not get credit that you might need. So I encourage you to get it in on Thursday.
Mr. Wilkinson,
Depending on my grade, I'll send that in tonight. So please send my grade in.
Mr. Wilkinson,
Hadith, not grade. Live and die on grade. Yes.
you're giving a makeup exam if our grade is not applicable?
Oh, you came in after the discussion.
Yeah.
Yes.
You read like 7.
Yes, sir.
Clinton,
Shouldn't
Yes.
tell him nothing.
listen, yeah, it's a good thing you spoke up. I told the class before you came in that I will be given a makeup exam. I'll be sending the original midterm exam for you guys to do, but it must be emailed to me on no later than Thursday, midnight.
Yes, sir.
Please, I don't want any scratchy, scritchy, half done, half baked, rushed papers. If I get papers like that, I will take off credit from credit.
Yes, sir.
What I want you to do is to start early, work on it diligently, find the correct answers, do your statements and your problems diligently. What
Yes,
I
sir.
really want to do is not only use the midterm makeup to help you improve your grade, but also to reinforce the information that you ought to have been aware of. So I'm
Yes, sir.
hoping that after the midterm makeup is done and you've done it diligently, everybody will be even a little bit better at doing that particular bit of information. Okay?
Okay.
Killing
Right.
2 birds with 1 shot. That is due on Thursday, midnight max. Also, I'll be sending homework questions.
Yes, sir.
It will not be due until Monday.
Okay.
All right?
So when is the are you gonna send the midterm tonight?
Yeah, tonight.
Okay,
Yeah, tonight,
that's all.
okay?
That's all.
Any other questions, anyone?
That's it.
All right, wonderful. I'm glad it's you guys with all this crazy stuff to do and not me. Is there anybody's name I didn't call at the beginning of class?
Clinton.
Okay, Clinton, let's see if I have Clinton, 1, 2. Okay, I have Clinton. Dania, are you in the class now? No, Dania still. Okay, I think that's about,
Maybe the person who doesn't have a mic.
who's that, Herbenique, right?
I think so, yes.
Someone doesn't have a
Herbenique, are you
mic.
still there?
Yes, her, she's there, but she don't have a mic.
Okay,
Oh.
she's there. Let's see. Yeah, she's there.
Chanel is there as well.
Chanel is here, actually. Chanel,
I am here.
you've been here all this time?
Yeah, I came in late though. I wasn't here from the beginning.
Oh, so you are a beneficiary of that stuff I just told Clinton then?
Yes, indeed.
Oh, man, it's a good thing that came up. Fantastic. All right, so we're all on board now. Please get started as early as possible. Do not wait for the last minute to do any of this crap. Last minute stinks. And then after you get stuck and things get a little stinky and everything else in the world happens, then you have to try and figure out who to blame, who to curse, and who to be mad at. Don't do that to yourself. Start early and do a little bit at a time so you can do it without losing your mind and or your patience. All right, you guys have a great week and I'll see you on Monday. I'll be looking for
good
my
evening.
makeup answers on Thursday midnight. If it comes 12:01, I'm gonna be midnight. That's the deadline. All right,
Yes, sir.
have a great week. Take care.
Good evening, guys. Have a good night.
Good night, everybody.
Good night.
Good night. Good night.